Very good morning once again, everyone. Welcome back to CA Intermediate Advanced Accounting. We're going to start one of the most exciting topics, one of the most interesting topics, what I skipped during my CA final examinations, consolidated financial statements. So let that not scare you. I've learned this topic later to teach in the class. In fact, I gave up. Yeah, I gave up because I did not like the way I read the topic first time. I learned it step one, step two, step three, step four. Dancing steps were okay, but these steps, when I tried to revise it 1 month before the exam, I found it very irritating. I found it no progress. I got stuck in every new problem. That problem, if I could read, I could solve that problem. A new problem, I was always stuck. But I've devised it in such a way that you don't have to remember any steps. Don't have to remember anything. It will become part of your process. In fact, the day before the exam, you don't have to do any question on consolidation. You can straight away crack the question in the exam only if you understand it in the conceptual way, like how we're going to do right now. To begin with, what is consolidation? Why do we do consolidation? There's a holding company, there's a subsidiary company. Holding company is called a holding company because it has a subsidiary company. That is because it has more than 50% stake in that company. When holding company has more than 50% stake in that company, for our understanding, let's assume holding company has 100% stake in the company. Holding company has how much stake in the company? 100%. So let's say I am holding your subsidiary. 100% of your share capital is mine. So using that capital, if you buy any PPE, if you buy any inventory, or if you have any other asset, do I own your capital or do I own that asset? I own that asset. In my balance sheet, on the asset side, I'll write your name on the asset side, share capital invested. In your balance sheet, you'll write my name in the liability side. And whatever assets you write belongs to you. Actually, I don't own your share capital. I own what you own. What's yours is mine. So in my balance sheet, instead of writing balance sheet asset side, investment in subsidiary, 1 lakh rupees, I will remove that investment and write all your assets in my balance sheet, all your liabilities in my balance sheet. Prepare my balance sheet as if I and you are not two different bodies and two different souls. It is one single body and one single soul. That's consolidation. That's consolidation. I will write my assets and liabilities. You will write your assets and liabilities. Standalone balance sheet. Entire capital of yours I have only given. So what's yours is mine. I will take your balance sheet. I'll take my balance sheet. Literally add both balance sheets. That is consolidated balance sheet. I'll take my PL. I'll take your PL. Literally add both the PLs to prepare one single PL. Consolidated statement of profit or loss. I'll take my cash flow statement. I'll take your cash flow statement. Add them together. Consolidated cash flow statements. So basically, consolidation is addition. Consolidation is addition. This addition you will not do with two random people. Someone whom you see walking on the street, you cannot say what's yours is mine. You can't tell. You can tell it only when you own that person. Your dad can tell. Nandenu nindenu. Whatever is yours is mine. You have phone. Who bought that phone? Papa. So that phone basically belongs to dad only. You get it? So that way, as a family, you can tell what's yours is mine. Instead of you preparing balance sheet separately, me preparing balance sheet separately, we will add both the balance sheets to prepare one single balance sheet, which includes not just my assets, your assets, my assets as our assets. This is consolidation. But to do this consolidation, there should be always that holding subsidiary relationship. Holding subsidiary to add balance sheets. First, standalone of holding, standalone of subsidiary should be ready. Only then we'll do consolidation. So you remember financial statements of companies chapter. Holding company separately prepares its balance sheet PL cash flow. Subsidiary company separately prepares holding or say balance sheet PL cash flow. Then investor in the holding company, investor in the holding company wants to know what's happening in the subsidiary and how will it look with the holding company. So as an addition to regular balance sheet, we will do consolidated balance sheet. So holding company to its investor, it should give standalone financial statements and it should also give consolidated financial statements so that the user gets to know how will the entire group financial statements look together. What does the entire group financial statements look together? Is it casually that we have time, or is it because we have 14 marks in the exam we prepare consolidation, or is there a better good reason why we prepare consolidation? There is a very strong reason why we prepare consolidation. Why do we do consolidation? Because Section 129 subsection 3, section 129 which talks about financial statements, as subsection 3 which talks about consolidated financial statements, which says that whenever there is a subsidiary company, you have to prepare consolidation. So is it an option to do consolidation, or is it compulsory to do consolidation? Compulsory. When do you have to compulsorily prepare consolidated financial statement? Whenever you have subsidiary. What if you don't have subsidiary? You don't have to prepare. So whenever there is subsidiary, you have to prepare consolidated financial statement. Whenever there is no subsidiary, you don't have to prepare consolidated balance sheet. I hope everybody understood this. Say something. Yeah. Ah. So the next point is there are certain exceptions where you don't have to prepare consolidated financial statements. When is it that you have exclusions or exceptions when you don't have to prepare consolidated financial statements? Very simple. You saw the price of a company share dipping in the market. It fell down. So what do? Somebody told buy the dip, meaning whenever the price of a company share goes down and you believe that company has the potential, buy the shares of the company so that later the price of the shares go up, you will sell and then you make profit. Do you want to exercise control? No. In the market, the price of a company's shares fell down. What do? You start buying. You start buying in such huge quantities that you did not realize that you ended up buying more than 50% in that company. Right now, you have 60% shares in that company. Do you want to control that company? No. Do you want to direct that company? No. Do you want to have that holding subsidiary relationship? No. Why did you buy? As an investment. What will you do? Very shortly, in few months or in few days, when the price of that company share goes up, you will sell and you will make profit. So in this case, are you holding subsidiary? Yes. But is your intention to hold that company for long? No. It is a temporary holding subsidiary relationship. It might not even last till balance sheet date. If in case by mistake it lasts on the balance sheet date, you are holding subsidiary, correct. You are related parties, correct. Disclosure is required, correct. Consolidation not required. When should you do consolidation? Consolidation is required when you want to have long-term relationship. That control is not temporary. Control is long-term. You hold more than 50% with an intention to hold more than 50%. By mistake, you hold more than 50%. That's not considered as requirement sufficient for consolidation. Is it related party relationship? Should you do consolidation? When should you do consolidation? That should be not temporary. Second one, you have intention to have long-term control, but government doesn't let you have control. The rules have been made so strict that you cannot exercise control. I'll give you example. Now, telecom, if you see in the country, who are providing telecom services in India, BSNL will never tell. It will Airtel. Okay, next. Anything other than Airtel Jio? Some people in the class might have VI. How many in the class have VI? See, one, two, three. Raise your hand straight. Three, only three, four. Now, how many of you have Airtel? No, see the class. Down. How many of you have Jio? See the class. Down. How many of you have BSNL? There are people. ಇವರೆಲ್ಲ ಗಡಿನಾಡು ಪ್ರದೇಶ ಎಲ್ಲೋ ಬೆಟ್ಟದ ಮೇಲೆ ಮನೆ. No. Some very government friendly people. One, two, three, four. So other than Airtel and Jio, there is four people using BSNL, two or three people using VI. In a class of 200, there is not even 10 people. So you understand, across the country also this is the case, no? Very less people use BSNL and VI. So we don't even know other players' name. Only two, Airtel and Jio. What if Jio starts acquiring shares of Airtel in the market? Bharti Airtel. If they start acquiring and if they acquire more than 50%, Bharti Airtel will become subsidiary company. Then what if they go for merger, amalgamate into one company? There will be only one telecom provider in the country. This is just an example, okay? If there is only one telecom operator in the country, everyone has Jio, monopoly, then they will say incoming calls 1 rupee per minute, outgoing calls 5 rupees per minute, 1 GB internet 50 rupees. Now tell me, roaming is also there. Roaming, you don't understand roaming, no? Your telecom number is registered in Karnataka, you go outside Karnataka, For incoming call also higher price will be charged. Internet will be at a higher price. Roaming, like because you're outside the home network. It was there previously. Now the full India free, internet free. In half an hour, breakfast break, you'll finish 1 GB. Back in the day, we used to use 1 GB over 1 month. Let's come back to the example. If in case Geo has enough money, has enough bandwidth to acquire entire Airtel, if they acquire, it will become monopoly. Now, what is stopping Reliance from doing this? Government Competition Act. What is it called? Competition Act says that one competitor cannot buy the shares of another competitive company. Even if you buy, you cannot exercise any control over that company. If you want to exercise control over that company, or if two competitors want to merge into one single company, you need to take permission from Competition Act. Competition Act will give permission only if the Act believes this merger will not be detrimental to the interest of the consumer. Consumer should not get affected. It should not create monopoly. It should be good in public interest. Then they'll give you permission. Otherwise, they'll not allow. Imagine Pepsi and Coke going for a merger. Either you eat, drink Pepsi or you drink Coke. They both are competing. What if they together become one single entity? Then you are addicted to one of those. No, they can charge very high price and you have no option, but you end up consuming them at the such a higher price. So government will put restrictions. So 2 points where consolidation is not needed. Number one, when you have control, but your intention is to have only temporary control. In a very short time, you will sell. Second one, you have control, means you have intention is also long, but government has put restrictions because of which, though you hold more than 50%, you still cannot exercise control over that company. Though you have more than 50%, still you cannot exercise control over that company. In these two cases, there is no need to do consolidation. Read this: exclusions for preparation of consolidated financial statements. When control is intended to be temporary or operates under severe long-term restrictions affecting transfer of funds. In this case, should you do consolidation? The answer is no. Do you want one more very good example where the government has put long-term restrictions? You guys finished GST recently, no? Have you heard of GSTN? No, GSTN is not a statutory body. GSTN is a Section 8 company. Section 8 company is company created not for profit. NPO, it's a not for profit company. So it's like a normal company. It will have share capital. It has shareholders. Recently, means in the last 3 years or 4 years, the shareholding pattern is changed. But when GSTN was initially incorporated, when GST initially came, do you have any clue what was the shareholding pattern? More than 50%, that's about 51%, was held by Axis and HDFC together. Axis Bank, HDFC Bank together held how much stake in GSTN? 51. State government and central government together had only 49%. So they have majority. Can they appoint anyone from their side as chairman? No. Chairman was always Minister of Finance in the country is the chairman of GSTN. You understand? So they both, if Axis and HDFC merge and then become one single company, they have 51% stake in GSTN. Can they say GSTN? You understand? No. What is there in GSTN? Whatever your GSTR filings that you do, GSTR 1, 2, 3, everything is there. Your purchase invoices, sales invoices, every detail is there. Let's say your business is a successfully running business. On 6-7 years setup you have done. You buy the raw material from the best supplier at the cheapest rate. You manufacture the goods and you sell it to a very good customer at a very high price. You make profit. You know what is it that's making your business profitable? Your network. You know where to buy, how much to buy, what quantity to buy, which month to buy. You know where to sell, when to sell, at what price to sell. You figured it over 5-6 years. No, which month in the year the sales is high, which geographical location the sales is more. Now I can copy your entire business model and make you wipe away your full profits and steal your profits by copying your business model. One thing that businessman does not tell anyone is business secret. Basically, they don't tell where do they buy from. Correct or not? You might have done your EOQ model, no? Economic order quantity, what quantity to order, how often to order, considering the handling cost, ordering cost, storage cost, everything, requirement for sale, everything you will consider and then do it. No, am I right? I compete with your business. I don't know the evoke, I don't know what is the right quantity to order. I'll either order more or I'll order less. If I order more, storage cost I'll pay. If I order less, ordering cost I'll pay. If I don't have enough stock, I might not deliver to the customer on time. So either ways, I'll make loss. If I can crack your EOQ model, if I get to know as to what to order, then I will be able to compete with you. If I get to know from whom to buy, I'll be able to compete with you. Which month the sales is high, which month the sales is low. All these are not known to a new business entrant. But all these details you give to GST department. What if tomorrow GST department leaks your information, sells it to somebody? If somebody buys that information, whatever business model that you cracked, problems that you understood, solutions that you found over 5 years can be copied by someone in 5 days, and they have a very good competing business to you. They will go to the same supplier from whom you buy the goods, because in GST, you know the PAN number of the supplier, address of the supplier, email ID, mobile number, everything you know. Which month, how much you bought also, we will get to know using GST details. Whom do you sell? At what rate do you sell? What is their geographical location? Everything is known. I can copy exact model. I know all your customers. I can cold call all your customers. I can get access to your suppliers. Isn't it very bad? So GST and more than 50% stake was held by HDFC and Axis. What if tomorrow they say that we have invested in GST and network, building the platform, now we want to utilize the database and then sell? Can they do it? Who's stopping them? Government. So they have 50% says zyada stake in GSTN, but they cannot access control over it. So GSTN practically, you want to say by AS18 or by stakeholding, it might look like your subsidiary, but you cannot do consolidation because you cannot access any control over that entity. In these two cases, there is a restriction on preparation of consolidated balance sheet. So let's get back. You know these basic things. You know what is a holding company? Yeah. When you have control, it becomes you become holding. The company on which you have control, it becomes your subsidiary. How can you have control? Two ways. One, more than 50% stake. Two, control over the composition of board of directors. 129 subsection 3. What does it say? Consolidated balance sheet preparation is compulsory. Sorry, basically consolidated financial statements preparation is compulsory whenever you have subsidiary. But there is exception. When should you not prepare consolidated financial statements? When the control is temporary or when it operates under severe long-term restrictions. In these two cases, no need to do consolidation. Why should you do consolidation? What is the objective? The user should get to know the big picture. The user should get to know now I am invested in holding company. In holding company's balance sheet, asset side, investment in subsidiary is given. But that investment in subsidiary is not one investment. That is investment in several assets. I want to know the full assets of subsidiary what I own. So instead of writing investment in subsidiary, I write all the assets of subsidiary by adding the balance sheet of subsidiary into holdings balance sheet. That's the point, which will help me take better decisions. So decision making will become important and complying the law. Understood? If you don't do consolidation, someone ask something. If you don't do consolidation, the holding company will prepare balance sheet and it will show the investment in subsidiary as per AS13. It is AS13. It will show it as investment, long-term investment. But if you do consolidation, this investment, we will not apply AS13. We'll apply AS21. What will we apply? AS20. Consolidation is not done just for balance sheet. Consolidation is done for all the financial statements. Consolidation is done for all the financial statements, which will include balance sheet, statement of profit or loss, cash flow statement, as well as notes and explanatory note. Everything together. But in your CA intermediate, you have questions on balance sheet and PL. Cash flow statement, you don't have any questions. We'll do consolidation of balance sheet, consolidation of PL. Balance sheet is what we'll be discussing for next 10 hours or 12 hours. Easily, comfortably. Got it? So the material what I've drafted, it's not in the pattern in which ICS study material pattern is there. I made it look like adjustment based, but we'll not read this. If you read this, you will not understand. We will understand it practically by AQs and then come back to these points. These, if you read now, you will not understand. Once we do the questions and then we see this, it will make you feel nostalgia about all the AQs that you have done. And same thing what we do in AQs is what will be there in the big questions. But I've broken it down to small problems. Can we begin with AQs? I want you all to come to AQ1. How many are there in your book? 25, 26 or something? 25. Maybe one question I've added new. It will become 26. I don't exactly remember what is the question, but you will get to know when we see. You will eventually write this. Can we all come to AQ1? Friends with me? AQ1. Today we'll keep a target of about 15 AQs. Okay, AQs, yeah. AQ1. Do you see this? There are two balance sheets. We need to merge these two balance sheets to prepare one single balance sheet. Consolidate the balance sheet. Why should we do consolidation? Very simple. Do you see the first balance sheet, that of holding company? Very good. Look at this holding company's balance sheet. In the asset side, you see investment in subsidiary limited 50,000. Now, follow this arrow mark and see equity and liabilities in subsidiary company, 5,000 shares of 10 each, 50,000. So the share capital of subsidiary is basically contributed by holding. 5,000 shares has been purchased by holding, which is the share capital of subsidiary. Can I say this company has 100% shares in this company? More than 50% makes it subsidiary. Whenever it is subsidiary, as per section 129, subsection 3, consolidation is optional or mandatory? Mandatory. So shall I make an assumption that this investment is supposed to be temporary, so no need of consolidation? Then they will also write in the answer, this answer is supposed to be invalid, so marks are not given. However, if it was considered valid, then I would have given mark. Don't make that assumption unless given. Always, when there is a consolidation question, assume that the control is not temporary. Assume that there is no severe long-term restrictions. Shall we do consolidation? I told you literal English meaning of the word consolidation. What is literal English meaning? Addition. What is it? Holding company's balance sheet, subsidiary company's balance sheet, add it. Who's adding? Holding company. Holding company will tell whatever is with you, it's me. Whatever you are today, it's because of me. Without me, you are nothing. What are you in front of me? Who? Holding company is telling this. To whom? Subsidiary company. ನಿನ್ನ ಹತ್ರ ಏನಿದೆಯೋ ಅದೆಲ್ಲ ನಾನೇ ಕೊಟ್ಟಿದ್ದು. Whatever you have this PPE 50. How did you buy this PPE 50? With the capital. Who gave the capital? Why? So this PPE might be in your balance sheet, but you are in my balance sheet. Might be your asset, but you are my asset. So what I feel is strategically in my balance sheet, instead of writing investment in subsidiary, I will write PPE 50. Whose PPE? Subsidiary is PPE. I'll write in my balance sheet. Why? Subsidiary itself is mine. If I write that PPE 50,000 in my balance sheet in the place of investment, that's consolidated balance sheet. It's so simple to start with. To start with. Shall we do the merger now? I want you to look at the question. Don't write. Don't write. Help me. What is there in our balance sheet? Throughout in this consolidation discussion, who am I? Holding company. Who am I? I will write equity and liabilities 10,000 shares of rupees 10 each, 1 lakh. Understood this? Then what else is there? Is there corresponding capital in subsidiaries balance sheet? Yeah. What is it? 5,000 shares of 10 each, 50,000. I wrote that also. Done. Liability side done. Now come to asset side. PP. How much is mine? How much is theirs? Yeah. What's mine is mine. What's yours is also mine. 50 plus 50, 1 lakh. I wrote this. Very good. Then what else do we have? Investment in subsidiary limited 50,000. I'll write investment in subsidiary limited 5,000 shares 50,000. Check the totals. Does the balance sheet tally? This is consolidated balance sheet. Something is not right in this. If you observe this share capital 5,000 shares, what is shown as liability, is what is shown as asset here. Why do you write same on both sides? What to do? Takki chiki. Durduka. Takki chiki. I remove this. One reason is same thing is shown as liability, same thing is shown as asset, remove it. I'll tell you a better logical reason, which you will not like. Shall I? Who's preparing this consolidated balance sheet? In my balance sheet, why will I write their share capital? Their share capital is their share certificate. In their share certificate, their company's name is written. Why will I write in my balance sheet? You understand? So I'll remove that. I will remove that. When I remove that share capital, my investment is also gone. No, when I tear that share certificate, their share capital gone, my investment gone, their assets will come and sit in my balance sheet. So this is consolidated balance sheet. Hope you understood. Now the balance sheet will tally at 1 lakh. Yeah, this balance sheet is no gully. It's like scratched items and all are there. We'll write one balance sheet without scratching anything. Shall I? Yeah. ಏನಪ್ಪ? Clean balance sheet. Yeah, consolidated clean balance sheet. I did the same thing without scratching it off. This is the consolidated balance sheet for AQ1. Copy, quick. Yeah, this one we will scratch. ವಾಲ್ಯೂಮ್ ಕಡಿಮೆ ಮಾಡ್ಬೇಕಾ? ಕಡಿಮೆ ಮಾಡಬೇಕಾ? ಎಸಿ ಅಂತ ಆಫ್ ಮಾಡ್ರಿ. You do one thing, you shift to that bench. That there the AC is slightly less. That AC is on. A bench will ಹಾಕ್ಬಿಡಿ ಮಾ ಹೇಳ್ತೀನಿ. Put that bench here and then say. Did you finish? What happened? Why are you laughing? What happened, yeah? Tell me also. Pawan is ಅಷ್ಟೇ ಡ್ಯಾಶ್ ಏನ್ ಮುಂದಕ್ಕೆ ಹೇಳದೆ. ಏಯ್ ನಾಯಿತು. I'm asking what happened. Have you heard that song? ಏನಾಯಿತು ಅದೇನಾಯಿತು ವಿಧಿಯಾಟ ಅದೇನಾಯ್ತು ನಾನಿಲ್ಲ ನನ್ನೋರಿಲ್ಲ. Madam over there, you change your place. You used to sit somewhere here. You went to that row last. It feels like you're sitting in the next building and watching the class. How come you used to sit here? No? Hi. You understand? I'm talking to you. Ah, yeah. I literally feel like she's in the building that is there across the street, and she's seeing through the trees. Can't sell binoculars. Should do like this. Can we go to AQ2? Come on, let's go to AQ2. Can I have your attention? Please, no talking. Have a look at the balance sheet, asset side. Do you see investment in subsidiary? Yes. How many shares do you hold? Now, from this tip of the arrow mark, come to this tip of the arrow mark. How much is the share capital? Oh, do you understand? The company in which you are interested, somebody else is also interested, but not as much as you. You are interested 80%. Somebody else is interested 20%. To you, it is subsidiary. To others, it is associated. You have control. Others have significant influence. What happened? She's clicking photo of AC. I thought you were clicking photo. If you do like this, God. Okay, so you hold 4,000 shares. Should we do consolidation or should we skip? Skip. He will make you sleep and he'll skip on you if you tell that. Hey, you have 4,000 shares out of 5,000. Take your calculator. One day sati, don't tap it 3 times. Calculator to AC button 3 times. Only once and it will be on. Tapping it 3 times. And if it's already on, you don't even have to tap it once. Do 4,000 divided by 5,000. Sir, I got 0.8. 2 into 100. 80% is more than 50%. You have control. Assume that there is no severe long-term restrictions. Assume that this is not temporary. Everything that when it starts, it will start with forever with you only. I want to grow old with you. I want to see grandchildren with you. Like that only it will start. Then lead changes. Coming back to consolidation. Should we do consolidation? Yes, we should. Shall we start consolidation? My equity and liabilities. 10,000 shares of rupees 10 each, 1 lakh. Shall I write in not so clean balance sheet? Yes. Then do we have share capital in subsidiary also? How much? I'll write that. Sir, that's not ours. First write. Then we will clean. Then after that, what do we have in liability side? Assets. My PPE 60. What's mine is mine. What's theirs is also mine. 60 plus 50. 1 lakh. Very good. Then how much is my investment? Do they have anything? No. I'll write that also. Now check. Does the balance sheet tally? Yes. At what price? 1 lakh 50. Correct. But this investment is being represented by this share capital. Shall I eliminate them? Tell ya. Yes, they're in danger zone. Share capital, you are eliminated. We eliminated share capital, we eliminated investment. Now check. Does the balance sheet tally? Liability side, it's 1 lakh. Asset side, it's 1 lakh. There's something missing. Correct or not? I should either deduct 10,000 on the asset side or write 10,000 on the liability side. Deduction from PPE is not possible. What will you deduct PPE for? Depreciation. No. I'll write here 10,000. Wildcard entry 10,000. But what is this 10,000? Wildcard. No, what is this 10,000? Rakshita. No, what? Yeah. 10,000. What is this 10,000? Reserve. Balance sheet. Balancing figure. Balance? Balance 1,000 shares. I told you, how many shares do you hold? How many shares were there in subsidiary? That 1,000 shares you don't hold. Somebody else holds. Am I right? Who are they? There's one word. Minority. You hold 4,000, no? You are? Then others are? So what did we do? We wrote this full PPE in our balance sheet, no? Tell ya, does this full PPE belong to you? This PPE partly belongs to you. Why? You gave 40,000 capital to subsidiary. Subsidiary took 10,000 capital from somebody. 50,000 capital was there, no? That was there in the form of cash. Using that cash, they bought PPE worth 50. No, this PPE worth 50. Does it belong to you or does it belong to minority? It belongs to both. In that 50, how much belongs to you? 40. How much belongs to them? Can I cut this PPE into two parts? Cake cut madhange. Happy birthday, happy consolidation to you. 40 and 10 will cut. 40 I will write in my balance sheet, 10 I will give it to minority. Can I do that? To do that, I should sell. Am I winding up the subsidiary? Not winding up the subsidiary. So what I do is, I will tell full PPE is mine. Minority will say, hey, I also have 10,000. Take cash, get lost. So I will not give them share in PPE. I'll take PPE. I will pay them 10,000. I will pay them because machinery cannot be cut into two parts. 40-20, sorry, 40-10, 80-20 also I can't cut the machine. Can I cut the machine? Bench I'll cut here in between. 20% you take, 80% you take. Can't cut. So what will we do? Entire PPE of the subsidiary will be included in the holding company's balance sheet. Share in the balance sheet asset of subsidiary, which actually belongs to minority, is the money that I owe to minority. Only 40,000 of the PPE should have been included in my balance sheet, but I included full 50. So 10,000, what is not mine, but I've recorded in my PPE, is the liability that I should give to minority. Understood? How much of PPE belongs to holding company? But how much did I include? So 10,000 I should give them. I'll record it as a liability. From this clean kachada balance sheet, shall I prepare a clean balance sheet? Sorry, from this kachada balance sheet, can I prepare a clean balance sheet? ಎಸ್ ಎಲ್ಲರೂ ಕಚ್ಚದಾನೆ ಅವ್ರು ಹೇಳ್ಕೊಳ್ಳಲ್ಲ ನಾನು ಹೇಳ್ಕೊಳ್ತೀನಿ ಅಷ್ಟೇ ನೀಟಾಗಿ ಬರಿತೀನಿ ಇಂಥ ಕೆಟ್ಟ ಪ್ರಪಂಚದಲ್ಲಿ ಎರಡು ಒಳ್ಳೆ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಮಾಡೋಣ ಬನ್ನಿ ಇಟ್ ಲುಕ್ ಕ್ಲೀನ್ ಯು ಅಂಡರ್ಸ್ಟುಡ್ ದಿಸ್ ಎಸ್ ಅಮ್ಮ ಪೀಸ್ ಪೀಸ್ 2 ನಿಮಿಷದ ಮುಂಚೆ ಈ ಬಾಟ್ಲಿತ್ತ ಈಗ ಅಷ್ಟೇ ಜೀವನ Guardium Leviosa. Super, sir. Super. Did you finish writing? You turning on the TV now. All this while TV was off. You turned off the TV now. Can we go to next one? AQ3. Are you ready? See, minority interest. What do you mean by minority interest? Shares in the subsidiary, not held by the holding. Shares in the subsidiary, which is not held by holding. Somebody else is holding it. It will also include reserves. But this question, there is no reserves. Slowly we'll introduce reserves. Can we go to next one? You have to write that box. Write it fast. 2 questions done. 13 questions left. I'm going to AQ3. Can we go? AQ3 Pandlama friends. Munadi Polama. How many of you are still writing second one? Tamila sir. Yeah, Tamil. AQ3. Observe. In our balance sheet asset side, how much investment do we have? 5,000 shares. In the subsidiaries balance sheet, how many shares are there? 5,000. Is there any minority? No. Whatever they have is completely mine. Is there minority interest? 100% subsidiary? Fully owned subsidiary? Do you understand the word 100% subsidiary? Do you understand the word fully owned subsidiary? What does it mean? There is no minority interest. There is no, come on, you know it, you've done the previous one. Let's add, right? Share capital. How much is the equity and liabilities of holding company? 10,000 shares of rupees 10 each, 1 lakh. Then 5,000 shares of rupees 10 each, 50,000. There's nothing on the liability side. PPE 60, 50. Shall I add to write 1 lakh 10? Tell ya. And how much is investments? 40. I'll write that also. Does it tally? Yeah, 1 lakh 50, 1 lakh 50. But this is little, little galeej. Why? This and this is same. Shall I eliminate? Yes, we will eliminate. Scratch it. Now, does it tally? There's a problem. Liability side it is 1 lakh. Asset side it is 1 lakh 10. Liability side 1 lakh, asset side 1 lakh. 10,000. What to say? We wrote no minority interest. There is no minority. So there is 10,000 missing. That much I know. But I also know it cannot be minority. Why? In order to write minority, there should be minority. How much shares do I hold? How much shares are there? I hold everything. No. There is no minority interest. There is no minority. Still it's not matching. Why? Price is not matching. Meaning, how much money did I pay? How much capital did they say they've received? Oh, so I paid 40,000 rupees to them, but I got shares worth 50. I'll repeat. How much cash did I give? How much shares did I get? So I got profit, no? I got more value than what I got. How much profit? This is not revenue profit. This is capital profit. This is not revenue profit. This is, in fact, I got 50,000 worth of assets by giving only 40,000 rupees cash. Do you agree with me? This is not actual profits, okay? Did I actually purchase it? No. I've given it to them, they have bought it. So I have, this is not 10,000 profit. Either worth to, this balance sheet worth is 50,000. No, it's not 50,000 rupees cash. Its worth is 50,000. But I paid how much? 40,000. That 10,000 is not actual profit. That's you tell no, it's like a profit. Is it actual profit? It is what is it? You tell no, leave it like that. That guy will tell. Don't take it seriously. This is body language. Don't use the word If that guy told it's like that, leave that guy. Not serious. See, you don't even complete it. Means not serious. Means hey, exam leave ya exam ಬರ್ತಾ ಇದೆ ಚೆನ್ನಾಗಿ ಓದಿ ಬಟ್ ಇದಕ್ಕಿಂತ ದೊಡ್ಡ ದೊಡ್ಡ ಎಕ್ಸಾಮ್ ಇದೆ ಜೀವನದಲ್ಲಿ ಎಕ್ಸಾಮ್ ಸರ್ ಇಸ್ ಟೆಲ್ಲಿಂಗ್ ಯಾವ ಚಾಪ್ಟರ್ ಇಸ್ ಆಯಪ್ಪ ಹೇಳ್ತಾನೆ. So what you need to know is this is not actually profit. This is not actual profit. This is a profit. That a profit is called capital reserve. What is it called? So this 10,000, I'll write it under the name capital reserve. Now check the balance sheet. Does it tally? I'll repeat. Why did we and how did we get this 10,000? How much money did I give? How much worth? Not telling value. I'm telling worth of assets am I getting? 40,000 I gave, 50,000 worth of assets I got. 10,000 I got more than what I gave. That 10,000 what I got more is a profit, which is capital reserve. Now it will tally. This is not a clean balance sheet. Do you agree with me? Shall we prepare a clean balance sheet? Yeah. What do? I'll remove those items, whatever is scratched, and I'll write it neatly. That's it. Ta-da. Copy quick. Please. He will charge for you to charge. Who charge for charge? Okay, AQ4. Observe, yeah. How many shares do we hold? 5,000 shares. See the sharp end of the arrow mark. How many shares are there? If you ಕೇಳಿಲ್ಲ ಅಂದ್ರೆ arrow mark ತಗೊಂಡು ಚುಚ್ಬಿಡ್ತೀನಿ. Listen, yeah, I am discussing next one and you guys are worried about window open ಮಾಡ್ಬೇಕಾ, close ಮಾಡ್ಬೇಕಾ. What is this window seat business? How many shares? They're discussing whether to keep the window. ಸ್ವಲ್ಪ close, ಸ್ವಲ್ಪ close, ಸ್ವಲ್ಪ open. So much of precision. No. Engineer also did not put in. How many shares do we hold? How much is their share capital? Can I say fully owned subsidiary? 100% I only hold? No minority interest? Very good. Shall we do consolidation? Help me. How much is the share capital that I should write? 10,000 shares of rupees 10 each, 1 lakh. I'll write their share capital also. 5,000 shares of 10 each, 50. Done. Now come to asset side. PPE, mine, 40. Theirs, together, 90. Shall I write 40 plus 50, 90? Next, investment. 5,000 shares, 6,000. Right? 5,000 shares, 60,000. Whatever is the value. Does it tally? 1 lakh plus 50, 1 lakh 50. 90 plus 60, 1 lakh 50. But I cannot write this as well as this. It is not nice. Why to write the same thing two times? Shall I eliminate that? My investment is their share capital. So I'll eliminate my investment against their share capital. I'll eliminate investment in the balance sheet asset side of the holding company against the share capital balance sheet liability side of subsidiary company. I'll repeat. I'll eliminate investment balance sheet asset side of the holding company with the share capital balance sheet liability side of the subsidiary company. I'll eliminate. Once I eliminate, the balance sheet should tally. Check the consolidated balance sheet liability side total 1 lakh. Consolidated balance sheet asset side total 90. It's not tallying. 10,000 difference. Minority interest. Okay, 100% subsidiary. We can't rate minority. Capital reserve. Why? Capital reserve means profit on capital transaction. Profit should be written on the liability side. Total on the liability side is 1 lakh. Total on the asset side is 90. 10,000 shortage is on the asset side. 10,000 shortage is on the, it cannot be capital reserve. Then what is it? Opposite of capital reserve is goodwill. Opposite of capital reserve is capital profit. Goodwill is capital loss. Capital reserve is capital profit. Profit arising on capital transaction. Goodwill is loss arising on capital. You never thought, no? Goodwill, you thought it's an asset. Goodwill is capital loss. Goodwill is capital. So how? Very simple. Going back to your partnership times. You are an incoming partner. If you give 1 lakh rupees, how much should be your capital? 1 lakh. But you used to bring 1 lakh 10,000 towards capital, but only 1 lakh used to be your capital. How? 10,000 was shared as goodwill between the existing partners. So you bring 1 lakh 10,000 cash, but your capital will be only 1 lakh. There is loss of capital to the extent of 10,000. Capital loss is goodwill. That's in the context of partnership. I'll explain the same thing in terms of company accounts. Nothing very different. How much money did you give? How much capital did you get? Capital lost. How much money did you give? It was 60 here. ಇಲ್ಲಿ ಬರೋಷ್ಟಕ್ಕೆ 50 ಆಗೋಯ್ತು. Paid it. Yeah, 10,000 ಮಾಯ ಆಗೋಯ್ತು. 10,000 loss. That is capital loss. I'll give you one more logic. This is partnership based logic. I'll give you asset side logic. How much money did you give to buy PPE worth 50? You bought PPE worth 50,000 by giving 60,000. If you get 50,000 worth of PPE by giving 60, 10,000 what you gave extra, no? You're asking them, where is the 10,000? Give me the 10,000. They're told they will not give. Why? They're telling, I've given you an asset worth 60. You're like, I saw only PPE worth 50. They will say, balance 10,000 asset. I have given, you have taken. It's just that you can't see, you can't touch. You have to only feel it. So, how much money did you give? 60. How much assets did you get? 60. How much asset did you get? But how much can you see? Remaining 10,000. You cannot see. You cannot touch. That does not mean it's not there. It is there. Where? There. But you can't. You can't smell. I don't know. But touch and feel, touch and seeing though you can't do. You can feel it. You can. Do you feel that goodwill in the air? Yes. Why? You paid 60,000, but you got only 50,000 worth of PPE. 10,000 what you have paid, but you don't see that you received something is. You understand? Yeah. Now check the balance sheet. Does it tally? Yay, 1 lakh 90 plus 10, 1 lakh. Shall I write one clean balance sheet without those scratched items? This is my consolidated balance sheet. At this moment, I would want to dedicate one small poetry for goodwill. Dear goodwill, I am not blind. It's just that you are intangible. I'll give you space on my balance sheet asset side. Will you stay till I amortize? You'll understand the meaning of the word amortization when you do age 26. Till then, you can copy this. If you really like this, you can write here wahwa wahwa. If you don't like it, don't write anything. Don't scratch it. Yeah, you can scratch poetry on goodwill, but you cannot scratch goodwill. Why? You can't see one. How can you scratch it? ಕೆರಿಯಕ್ಕೆ ನೋಡ್ಬೇಕಲ್ವಾ ಫಸ್ಟ್ ಗಾಯ ನೋಡಿ ಕೆರಿಬೇಕು. Can we go to next one, or are you still copying? Let's go to next one. Hey, online friends, did you also understand? So far, are you done till AQ4? Good. Shabash. Come on, let's go to AQ5. This is going to be two questions that we've done in the past coming together into one single question. How many shares do I hold? How many shares are there? So, is it 100% subsidiary? Is it fully owned subsidiary? There is minority interest. There is minority. Next thing, how much money did I pay? How much share capital is there? Did I pay more or did I pay less? How much more did I pay? 20. Sir, how? For 4,000 shares, I paid 60,000, not for not for 5,000 shares. So in this 10,000 is minority, no? How much is share capital that belongs to me? How many? Focus, focus. You guys are losing it. How many shares do I hold? How much is their capital? Is it 100% subsidiary? Fully owned subsidiary. There is minority interest. How much? So in this 50, 10,000 will come in consolidated balance sheet as minority interest. How much is the balance share capital that I hold? Correct. How much is the balance share capital that I hold? 40. For 40,000 share capital, how much money did I pay? I paid extra 20. That 20 what I paid extra is goodwill. If I pay less, capital is a profit. If I pay less, profit. If I pay more, loss, goodwill. You understood? So you'll write 10,000 here, minority interest. 20,000 here, goodwill. This will not appear. This 40 and 50 you will add together. 40 plus 50, 90 plus 20, goodwill. 1 lakh 10. Here 1 lakh share capital, 10,000 minority interest. Consolidated balance sheet done. This is slightly complicated. We'll do it slowly, one item after the other. You understood? But I hope you understood that quick discussion also. You don't have to remember like what I told now. That I know because I've done it many times. And how many times will you do this gullies and then clean, gullies and then clean? Go to washroom, yeah. Come on. You'll worry jaake gullies madde. Yeah, why do you shit here and then clear? Instead, go to washroom. So what do we do? Anymore, we will not write like this and then scratch. See, we know, no, we will write share capital, we will write investment, we will scratch it. What to do? Write them both outside balance sheet. Write them both outside, identify the difference. Identify the, write that as goodwill or capital reserve in the balance sheet. Identify goodwill or capital reserve outside balance sheet and then write it. Anyways, we write it here. If this is more, we write it capital reserve. If this is more, we write goodwill. Observe last two questions. So instead of writing them in the balance sheet, scratching them and then finding goodwill and capital reserve, can I do one working note outside the balance sheet to find goodwill or capital reserve? That is called cost of control. What is it called? Just that cost of control table, they'll ask for 4 marks. Now, I made you do how many questions? 4 AQs and then taught you cost of control. But I did not like this chapter when I learned because all the materials that I read from straight away starts with step number 1, cost of control. I did not understand why do they do cost of control. Now do you understand logically? Here we write and then scratch. Instead of writing here and then scratching, I'll write them outside and then bring the balance to inner column. So what do? We write share capital in consolidated balance sheet. We write investment in consolidated balance sheet. We identify the difference to find goodwill or capital reserve. Instead of doing that in the consolidated balance sheet, I'll do it in a separate working note. What is the name of that working note? Cost of control. Cost of, what do you mean by cost of control? Simple, yeah. How much money did I pay? Why did I pay 60? To get the shares of that company. When I get the shares of that company, what do I get? Control over that company. What do I get over that company? Now observe. I paid 60. Correct or not? For that 50,000 worth of assets I've got. 10,000 extra I paid to control that company. If I paid 50 anywhere, I would have got assets. I paid 10,000 extra to get what? My interest is not just asset. My interest is control. You get the logic here? So cost of control is 10,000. I paid 60,000 to get 50,000 worth of assets. 10,000 that I paid extra is cost of control in the form of goodwill. In the form of, you understand this? In this case, cost of control will be negative. Why? I paid 40,000 to get PPE worth 50,000. I paid 10,000 less and I got control also. I gave 40,000 rupees to them. I got 50,000 rupees worth of assets and I got control also. The cost of control is negative, meaning profit. Cost of control means expense, no? Expense is negative means profit. That's the reason I rate capital reserve 10,000. But logic is this. But we will do it step by step in detail. Are you with me?
Yes, sir.
Can I do AQ5?
Yes, sir.
Very good. First, let me write my share capital. How much is my share capital? 10,000 shares of rupees, 10 each, 1 lakh. I will not write subsidiary share capital in my balance sheet. Anyways, I would have to scratch it. So I'll write it outside. I'll write it. How much is the subsidiary's balance sheet? 5,000 shares of rupees, 10 each. I will write shareholding 5,000 shares of rupees, 10 each, 50,000. 5,000 shares of rupees, 10 each. Everybody got this? Come on. Next item. PP. Mine. Theirs. Mine. Theirs. Can I say 40 plus 50? 90. Anybody has doubt with 90? Pakka? 100% clear? What's after that 40 plus 50, 90? Investment in subsidiaries. How many shares have we invested in? 4,000. How much is their capital? Sorry, how much is the money that I paid? Don't touch 60,000 first. First discuss only this much. How many shares did I get? So out of the 5,000 shares of subsidiary, holding company has only 4,000. Holding company has only, how many shares are there? How many do I hold? So can I say nominal value is 40,000? That brings up to only 80%. So minority has 1,000 shares, which is 10,000, which is 20%. This 10,000 minority interest, I'll write in balance sheet liability side without forgetting. Split the share capital of the subsidiary into two. Holding, minority. Holding portion will be compared with nominal value of investment. That's nominal value of investment. Will be compared with book value of investment. Investment on the asset side to find goodwill or capital reserve. Minorities portion will be written in the balance sheet as liability. Do you understand? Holdings portion will be adjusted with book value of investment to find goodwill or capital reserve. Minorities portion, I'll post it straight to balance sheet. How much is the holding company share in that capital? 40. This is nominal value of investment 40. Where did I get it from? Liability side. Where did I get it from? I've written L. Now see the next item. How much did I pay? This 60 I'll write here. Book value of investment 60. 60,000 asset. 40,000 liability. 60,000, 40,000. Can I say 20,000 goodwill? Sir, how? Asset is more or liability is more? So asset minus liability, asset. Asset 60 minus liability 40 is asset 20. Or you want logic? Tell ya, what is the nominal value of capital? How much money did you pay? Did you pay more or did you pay less? More. That more that you pay will become loss, no? Loss is asset, balance sheet. Goodwill. Understood? So I'll write this goodwill 20. 90 plus 20, 1 lakh 10. 1 lakh plus 10, 1 lakh. Instead of writing inside and then doing scratching, I've written outside as two simple tables. This is what I explained to you some time ago. Once again, I'll explain. I want you all to focus. This 1 lakh is mine. I'll write it as it is. This 50,000 is there, no? How much do I hold? 60,000 beta first. How much do I hold? 5,000 shares. I hold 4,000. Balance 1,000 shares. That minority interest you write here, no? So minority interest if I write 1 lakh share capital, 10,000 minority interest. 1 lakh 10 liability side done. 1 lakh 10 liability side. In this 5,000, how much did I write to minority interest? 1,000 shares of 10 each, 10,000. Total 5,000 shares of 10 each, 50. In 50, if I write 10, what is remaining? 4,000 shares of rupees 10 each, 40,000. 40,000 is capital, but I paid 60,000 against it. This 40, if I eliminate from this 60, 20 will be remaining here as goodwill. So this investment will not appear in consolidated balance sheet. PPE will be 40 plus 50, 90. 20,000 will be goodwill. 90 plus 20, 1 lakh 10. Here 1 lakh plus 10,000 minority interest, 1 lakh. I taught you how to write minority interest separately. 1 AQ. I taught you how to compute goodwill separately. Now I am bringing in minority interest and goodwill together in one question. I hope you understood. We have done 4 small questions. 2 one on goodwill, 1 on capital reserve, 1 on 100% holding, 1 with minority. Now I am merging 2 questions together to make it one. Slowly I'll start adding more and more adjustments and fill that balance sheet with lot of items and lot of adjustments. That's how we learn. We'll stack it step by step. Slowly ask me if you have not understood any part of it, if you find any part of it difficult, comfortable. Anybody has any doubt? Ask, sir. Ask. Keli. No doubt. Akka. Okay, copy. You are going to do the next one. Next is accused 6. 6 are very similar. I hope you tried 6th one. Shall I show the answer? Yeah, not a difficult one. Yeah, it is shame. Only point of difference is there was goodwill, here it is capital reserve. In that question, if you observe, book value of investment, asset was more than liability. That excess asset was goodwill. Here liability is more than asset. That 10,000 extra became capital reserve. I'll tell this. Listen to me for 10 seconds. Holding companies share capital right in consolidated balance sheet. Imagine the balance sheet. Holding companies share capital right in the consolidated balance sheet. Subsidiary share capital split it into two. Holding, minority. Minority share in the share capital of the subsidiary posted to balance sheet. Minority share in the share capital of the subsidiary posted to holding company share in the share capital of the subsidiary, bring it to cost of control. Write it as nominal value of capital. Compare this with book value of investment. Compare this with, if book value of investment is more, goodwill. If nominal value of investment is more, capital reserve. Goodwill asset side, capital reserve liability side. Should I repeat once again? Share capital of the holding will go to consolidated balance sheet. What do you do with share capital of the subsidiary? Split it into two. What are the two parts that I'll split it into? Holding, minority. Minority, balance sheet. Holding, write it as nominal value of investment. Where? Cost of control. Compare it with what? Book value of investment. Book value of investment is balance sheet asset value of holding company. Nominal value of investment is taken from liability side. Compare asset liability. If asset is more, goodwill. If liability is more, capital is more. Asset meaning book value of investment. Liability meaning nominal value of investment. Post it to respective asset or liability side in the consolidated balance sheet. And your consolidated balance sheet will be ready to serve. Shall we go to 7th one? 7th one. 7th one. Hey, new item. What's the new item? Reserves and surplus. Till now, we did not have reserves and surplus. Slowly, reserves and surplus scheme. Then there will be more than one reserves and surplus. There will be one reserve with negative item. Then debentures will come. Then trade payables will come. Then trade receivable will come. Then cash will come. Then PPE adjustment will come. Then the balance sheet will look like a full family. Can we begin? Okay, one at a time. First, how much is our share capital? 10,000 shares of rupees 10 each, 1 lakh. What do I do with this? Write it in the consolidated balance sheet liability side. Shall I? In the consolidated, nobody will write. Everybody will understand. 10,000 shares. You don't have any other video also to go and watch. The way I do consolidation is different. Suddenly, if you see somebody else teaching consolidation, you'll be like, Sambandhane illa. Sir thought something else only you think. When you do consolidation question, don't compare your answer with ICA study material answer. Don't compare your answer with suggested answer or any other material answer. Don't. Because the pattern of solving is very different. Solve the full problem and then check the balance sheet. Every item will match. Cost of control, goodwill will match. But the way we solve is very different. So don't check the answer in between. Or don't compare to think that we've done something else. We've done the same thing in a different way. Okay. Hey, what is this magic? This is real magic. ಹಂಗೆ ಹಿಡಿತಾ ಇದ್ದಾನೆ ಅವ. 1 lakh. Then what do we have here? After I rate that, subsidiaries capital. How much? 50. I told this to you 2 times before we started this program. What do you do with subsidiary share capital? Split into 2 parts. What are the 2 parts? One, holding. Second one, right now I don't know how to split, but I know that it should be split. So what to do? Write it in a ready format to split. Don't split it. It will be split into holding, minor. We will split later. We will split later. Right now, just make it ready for split. Come to the next item. Reserves. How much is reserves of subsidiary? What is reserves? Profit. Of whom? Subsidiary. Subsidiary's profit belongs to whom? Whoever contributed capital. Whoever contributed profit belongs to owners. No. Is the holding company the owner? Yes. Is the holding company the owner? Yes. But not complete reserve will belong to us in one single way. I want you to go slightly back in time. You remember investment accounting? Do you remember something called pre-acquisition, post-acquisition? Oh. This reserves and surplus is 10,000. Meaning, on the date when you're doing consolidation, on the date when you're doing, how much is reserves? 10,000. The day when I'm doing consolidation, how much profit is earned by the subsidiary? 10,000. Am I there with the subsidiary from the day the subsidiary started? Can be. Can be. I'm there from day one. But is it a condition that I should be there in the subsidiary from the day the company started? I could have joined mid of the way. I could have joined in the middle. Can I join in the middle? Yes. If I was there from the beginning, full 10,000 is post acquisition. I acquired the shares in the subsidiary and then the profit is earned. What if I acquired the shares in the subsidiary in the middle? Then what will happen? Before I joined the subsidiary has earned some profit. After I acquired the shares in the subsidiary has earned some profit. Understand? Subsidiary company has earned profit of how much? 10,000. If I was there with the subsidiary, from the day the subsidiary started, then entire profit is post acquisition. Entire profit is. But what if some profits in the subsidiary are earned after I acquired because I acquired the shares in the subsidiary in the middle? Then some profits are pre-acquisition, some profits are post-acquisition. What should I do? I should split the profits into pre and post. Why? The treatment of pre-acquisition profits is different from treatment of post-acquisition profits. Treatment of pre-acquisition profit is different from treatment of post-acquisition profit. Having told this, I will give you a minute to think and tell me how is it different. You remember AS13? How did we treat pre-acquisition part? Adjustment with? Wow, beautiful answer. Very happy. Adjustment with? Post acquisition was profit, revenue profit. Pre acquisition is like capital profit. So I should split this reserves and surplus of the subsidiary into 2 parts: capital reserve, revenue reserve. Split it into two: capital reserve and what is capital reserve? Pre acquisition profit. What is revenue reserve? Post acquisition profit. Post acquisition is revenue, repetitive in nature. It will keep coming, and it came because of my efforts. What is capital reserve or pre acquisition reserve? Reserve which is arising out of the profit earned by the subsidiary before I became the holding company. My contribution is not there in that money. You agree with me? So I would have paid more money than normal. You remember Nai Mari story? Would have paid more money than normal. Understand? So pre-acquisition profit should be deducted from the cost of investment. If you don't remember, you would have to go back to accounting standard 13. Accounting standard 13, 13, 13. Remember the story? Dog was there. Dog will give birth to baby. Was it your baby? Depends upon when did you buy the dog. First you bought the dog and then the dog gave birth to baby. No, that is not the point of discussion. The point of discussion is when you bought the dog, was the dog already having the puppy? Or did the puppy come after you bought the dog? You remember? We used to do pre-post ತೋರಿಸ್ತೀನಿ ನೋಡಿ ಇಲ್ಲಿ. Is net buyer's interest. All of this pre-post. You have written all of this in your book. You feel like, oh my God, yeah, I feel like I've done this in my previous life. ಹೇಳಿ ಪ್ರೇಮಿಗಳೇ ಒಬ್ಬಳು ಸುಂದರಿದಳು. Pre-acquisition, post-acquisition. Remember, for this period they're giving dividend. You bought here. After you bought, they gave dividend. But during the period when the profit was earned, you are not there. But when the dividend is distributed, you are there. So pre-acquisition dividend, what did we do? We did not write it to P&L. Dividend is received out of the profits earned by the company before acquiring the shares. Pre-acquisition dividend. What was the treatment? Deducted from the cost of investment. Same is what we are going to do here. If you have forgotten, please go back there and then revise. So Yuga Purusha, Allah pa, accounting standard 13. Remind me about it when you're copying. I'll tell you one beautiful movie story. Ravichandran, old movie. Ravichandran, no? Huh? So 5,000 shares, 50,000 I hold. 100% I only hold. But profit what they want 10,000. See this here. On the date of acquisition, reserve was how much? The day I acquired the company, how much reserves was there? The day I'm doing consolidation, how much reserves is there? 8,000 came after I came. So 8,000 is post acquisition. 8,000 is revenue reserve. 2,000 is pre-acquisition. 2,000 is capital reserve. So I will split that. I'll write reserves of subsidiary. 10. I will split it later when I come to adjustment. Till then I'll keep it like this. Is that okay? I'm back. PPE. How much is our PPE? How much is their PPE? 50 plus 60. Easy. So far your favorite item in the consolidated balance sheet is 50 plus 60, 1 lakh 10. Very soon that will also change. Then investment in subsidiary. I should not go to 50,000. First I should see inner column. How much is investment? What do I do with this 5,000? Share capital of that subsidiary should be split, no? There will write holding 5,000. 5,000 shares is how much? 50,000, which is 100%. So minority is 0. 100% subsidiary. Where do I write this 50,000 rupees? Cost of control. What is the name? Very good. Nominal value of investments, liability 50,000. Then in the inner column, we did this 5,000 shares part. How much is the outer column value? What is 50,000? Book value of, I would write here, book value of investment. How much? Understood this? 50,000. Sir, why inner column? I told you reserves pre-acquisition reserve should be deducted from cost of investment. By this, I'm done with full balance sheet. Come to the adjustment. Sir, only one adjustment. First to do one only. What is that one adjustment? On the date of acquisition, reserve is how much? So I'll split this reserve. 10,000 only. Pre is 2. Post is, sir, they have not given. Hey, at the end, it is 10. Pre is 2. How much is post? Now, everyone tell me, how did you get 8? 10 minus, very important. Later, you will forget this. I am not kidding. Promise. You will forget this. You will ask doubt. Remember this if you want right next to it, put one star and then tell I will forget this. Sir as challenge or sir's challenge. Later you will forget this and you will ask one annoying doubt. Not just now, 3 months later also you will ask one doubt. But it is 10 minus 2, 8 logic only. Let's see how many of you will not do that mistake. Yeah. So if in case you forget, come back to this video, watch it at 1 hour 20 minutes. 3 months ಆದ್ಮೇಲೆ Telegram ಅಲ್ಲಿ message ಕಳಿಸಿದ್ರೆ I'll tell. Go back to watch first day of consolidation, 1 hour 20 minutes point. So 2,000 capital reserve, 8,000 revenue reserve. What to do with capital reserve 2,000? Deduct it from book value of investment cost 2. So 50 minus 2 is 48. Got this? This 8,000 revenue reserve will go to balance sheet. Direct consolidated balance sheet. I'll rate revenue reserve 8,000. You understood? Now, liability is how much? 50. Asset is how much? Which is more? Liability. Liability is capital reserve of 2000. I'll write capital reserve. Sir, this was there 10,000 in that balance sheet. Yeah, I can't write 10,000 directly. I'll split it into capital and revenue and then write. You understood? Now what? Balance sheet valid 1 lakh 10, 1 lakh 10. Oh. Sir, it's same reserve, but you cannot write directly. What should you do? Split into capital and revenue. You understood? Everybody, copy this. Slowly, then we'll go to next one. How many done? 7 done. 6 more. With yourself is hope. Not now. Hope can make wonders. Hope can make a man with broken jaw come and bowl to get Brain Lara's wicket. Hope can make a man fighting with cancer play for the country to win World Cup. Hope can make a man with 6 stitches come on the field to score back-to-back centuries. Hope can make a man with major accident come back on the field to do Spider-Man film. Hope can make a man with broken thumb to come to the bat with a torn gloves to score for the country. Hopeless people. Huh? Hope andre adra ಅಯ್ಯಯ್ಯೋ ಹೋಪ್ ಅಂದ್ರೆ is talking about player hope, Shahi hope. West Indies had 2 players. One guy has name is Hope, one guy's name is Chase. You have hope when you're chasing. See, both the answer here only. ಇಟ್ಕೊಂಡಿಲ್ಲ ಹೋಗಿ ಹೇಳ್ತೀನಿ ಎಲ್ಲಿವರೆಗೂ ಹೋಗ್ತಿರೋ ಹೋಗಿ. Shall I scroll down? ಎರಡು ದಿನ ರಜೆ ಬರುತ್ತೆ ಅಂತ ಇಂಡಿಯಾ ವಾರ್ಗ್ ಹೋಗ್ಲಿ ಅಂತ ಅನ್ಕೊಡೋರು. ನಿಮಗೆ ಇದೆಲ್ಲ ಅರ್ಥ ಆಗುತ್ತೆ. Che, everyone is participating. We are only not part of it. Che. Could have got 3-4 days leave to class at least. Shameless people, shameless people. Shall we go to next one? Do you have that yellow color box there saying pre-acquisition reserve to be adjusted from the cost book value? Remember AS13? They're not there. Good. Can I take you to next question? Cool. Come on. Let's go to AQ8. Same, yeah. How much is the share capital? How many shares do we have? 4,000 shares, sir. Yeah. We have 4,000 shares in subsidiary. But subsidiary share capital is how much? 5,000. We are now doing AQ8. Do I hold 100% of its share capital? I hold only 4,000 out of 5,000. 2, 4 by 5. 80%. 20%, that is 1,000 shares of rupees 10 each. 10,000 will be minority interest. 40,000 will be nominal value. That 40,000 share capital will be compared with 50,000 book value. But there's something more in this. What's more? Reserves and surplus. How much is reserves? In the 2,000 is pre. How much is post? So can I say 8,000 will be deducted from 50 first? Correct alva. Post, 2,000 will be deducted from 50 first. 8,000 revenue reserve will appear in consolidated balance sheet. Out of this 10, 2 is pre. So 2 will be deducted from 50. How much will be the revised value of investment, book value? 48. What is nominal value? 40. So 48 and 40. 8,000 payment is more, goodwill 8,000 will come. 2,000 is adjusted. 8,000 will appear here as revenue reserve. Share capital 1 lakh will come as it is. Minority interest 10,000 and revenue reserve 8,000. 1 lakh 18. Liability side. Asset side, PPE 50 plus 60, 1 lakh 10. This investment will not appear. Here I'll write goodwill 8,000. 50 plus 60, 1 lakh 10 plus 8, 1 lakh 18. It'll tally. Easy. Did not understand? Shall we do it step by step? But Little also. This also will not. I was having hope that you will understand, which you will not understand, which you don't take seriously. How much is share capital? How much, yeah, equity share capital? Yeah, 10,000 shares of rupees 10 each, 1 lakh. Done. After this, what is the share capital of subsidiary? 5,000 shares of rupees 10 each, 50,000. I'll write share capital. 5,000 shares of 10 each, 50. Should be split between holding and minority. We'll split it later. Come back here. Reserves and surplus of subsidiary is how much? 10. Should be split no into pre-post. I'll write it pre-post later. I'll write it as pre and post later. Come to the next item. Then PPE. How much is our PPE? How much is their PPE? 50 plus 60. Till the time you are following the order in which I am telling, you will not go wrong. Skip the order. Try to do randomly. Then you will not know what's done, what's not done. 50 plus 60, 1 lakh 10. What's after that? Investment in subsidiary. How many shares? 4,000 shares. Can I say holding as 4,000 shares, which is 40,000 rupees? To 40,000 by 50,000 or 4,000 by 5,000? 80%. Where do I rate this 40,000? Where? Heading. Cost of control. I'll write here nominal value of investment 40,000. If I hold 4,000 shares out of 5,000, minority holds 1,000 shares. That is 10,000 rupees. That is 20%. What do I do with this 10,000 rupees? Minority interest. Write it to not directly. You know why? Till now, when we had minority interest, we did not have reserves. When we had reserves, we did not have minority. In this, there is reserve, there is minority. This, the reserve, does it belong fully to me? It belongs partly to minority also. After I split that into pre-post, I should also split it between holding and minority. I should also split it between. Now you think and tell me, how do I split that 10,000 between holding and minority? Shareholding. What is a shareholding? You understood why did I compute 80-20? Sir, previous question you didn't make us do. Previous question 100% subsidiary. Hopefulness people. See, 100% subsidiary. Sub minority ne illa. Ilderoರ್ಗೆ ಎಲ್ಲಿಂದ ಕೊಡ್ತೀರಾ? If they are there, you can give. If they are not there, how can you give it to some? How can you give something to somebody who's not there? So what do I do? I would write a table for splitting the profits between holding and minority in the ratio 80-20. But I don't know the profits now. After I get to know split between holding minority, sorry, pre and post, then I'll split it between holding and minority. Understood? Come back. Then next, how much is the book value of investment? What is the book value of investment? Where do I write? In the cost of control table, inner column. Why in the inner column? Pre-acquisition reserve to the extent it belongs to holding should be deducted. Pre-acquisition reserve to the extent it belongs to holding should be deducted. Why only to the extent of holding? Because what belongs to minority is not ours. So you didn't do that in the previous one. Previous one, everything belonged to us only. So what do? I would write here book value of investment in the inner column. Got this? Come back. What's next? That's it. Balance sheets are done. Both the balance sheets done. Come to adjustment. What does it say? On the date of acquisition, reserve was how much? So can I say pre is 2, post is how much? Once again, how did you get 8? You might find this funny, but I want you to tell this once again. How did you get 8? Reserve on the balance sheet date 10. Reserve on the balance sheet date. Reserve on the date of acquisition. Reserve after acquisition earned during the period. 10 minus 2, 8. Everyone's clear? Okay, 2000 is capital. 8,000 is revenue. I should further split this into holding minority. See, reserve split between split between pre-post. Pre-reserve should be split between holding minority. Post should be split between holding minority. You like this table, no? First drop 2 arrow marks like this. Under the first arrow mark, 2 arrow marks. Under the second arrow mark, 2 arrow marks. You can do that, but I would not do that. I have a reason why. Now there is one reserve. One reserve split into pre-post, pre-holding minority, post-holding minority. Very soon, I'll give you two reserves. General reserve and P&L. Reserves. General reserve, P&L. General reserve, pre-post. P&L, pre-post. General reserve pre holding minority. General reserve post holding minority. P&L pre holding minority. P&L post holding minority. What if I add one more security premium? Then general reserve P&L security premium. What if I add one more revaluation reserve? Each reserve pre-post, 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 pre-post. Pre holding minority, post holding minority, pre holding minority, post holding minority. Due to that, it will look like that taproot system. Used to write no roots drawing. It will be like that. So instead, what to do? Split reserves as pre-post, pre-post, pre-post. Pre, total. Total pre. Post, 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 total. Total post. Split it once for all between holding and minority. You understood? This table, you don't have to do this table. You can write here only. Holding, minority, holding, minority. For this question, you can do. But for a bigger question, you will not be able to. So the bigger questions adjustment will learn from smaller question only. Is that okay? Very good. 80% of 2000. Very good. 1600 is pre-acquisition reserves, which belongs to holding company. I'll repeat. What is 1600? Pre-acquisition reserves that belongs to. Where do I write that 1600? Pre-acquisition reserves should be deducted from cost of investment, book value of investment. Where is book value or cost of investments? Cost of controls is written in inner column 50,000 and it's waiting. ಬನ್ನಿಪ್ಪ ತುಂಬಾ ವರ್ಷದಿಂದ ನಿಮ್ಗೋಸ್ಕರನೇ ಕಾಯ್ತಾ ಇದ್ದೀನಿ. What do we deduct? 1600. Deduct. 48. Purinjada sir. Everybody understood? Yes, sir. Okay, cool. 40,000 is liability. 48,400 is which is more? Asset. 8,400 will be. Very good. You understood how to identify? Write liability, asset. Whichever is greater number sign, you write greater number sign. And then take the difference and then write. If it is A, goodwill. If it is L, capital. This you like more, no? Logic made up. Not magic only. Goodwill 8,400. Here one item over. Next item. Post-acquisition reserve or pre-acquisition minority share. Post-acquisition reserve will do. How much is post-acquisition? 8,000. 8,000. Holding share of 80%. Where were we writing? Revenue reserve. All this while. Where we've done in the last two AQs. Where do we write revenue reserve? In the consolidated balance sheet, liability side, reserves and surplus. In the consolidated balance sheet, liability side, reserves and surplus, I'll write revenue reserve 6,000. Done. Something. Next item. Minority share 20% of 2,400 or 2,000 minus 1,600 and 8,000 into 20%, 1,600 or 8,000 minus 6,400. What is this 1,600 and 400? Minority's share in profits of subsidiary. Minority share, I don't care whether it is pre or post. I don't care whether it is pre or post. What do? I'll write it in minority interest. Previously, this minority interest 10,000 we used to directly write to balance sheet, no? Now I won't write directly. I kept it pending. This 10 I'll write here. Share capital 10. Revenue reserve and capital reserve. Revenue reserve is 1,600. Capital reserve is 400. So how did you get here? Capital reserve 400. Revenue reserve 1,600. Add. Total minority interest will become 12,000. I'll write 12,000 to my consolidated balance sheet. Capital reserve is not there. If it was there, I would have written. It's not there in this case because there is goodwill. Goodwill idre capital reserve illa. Capital reserve idre goodwill illa. Eradu idre marks kodalla. Why? You have done mistake. Understood this? Now check the total. 1 lakh plus 6,400 plus 12,000. 1 lakh 18,400. 1 lakh 10,000 plus 8,400. Yay! Yep. Copy. Nice, no? Wow. Wow. ಯಾರೋ ಕಳ್ಸಿದ್ರು ನಿಮ್ಮ ಕ್ಲಾಸ್ ಅವ್ರು. So like, what will the modern generation people call? Mother will become ma. Sister will become sis. Father will become fa. Mother will become bro. ಅಣ್ಣ ನಮ್ ಕೈಯಲ್ಲಿ ತಡ್ಕೊಳಕ್ ಆಯ್ತಾ ಇಲ್ಲ. ನಾ ಸತ್ತೋಯ್ತೀನಿ. ನಾವು ಸಖತ್ತಾಗಿ ಆಕ್ಟಿಂಗ್ ಮಾಡ್ತೀವಿ ಕಣ ನಾವು. Right, quick. This EQ 8, 7 more. Progress. Some progress is there. Reserve is the only point of learning. Rest everything is same to same. Can I touch? Can I? Arambikla, my friends. Talk. ಮಾತಾಡ್ಬೇಡಿ ಅಂತ ಸರ್ರಿಗೆ ಮಾತಾಡ್ಬೇಡಿ ಅಂತಿದ್ದೀರಾ. ಸರ್ ಮಾತಾಡಿಲ್ಲ ಅಂದ್ರೆ ಪಾಠ ಹೆಂಗಾಗುತ್ತೆ? ಅವ್ನ್ಗೆ ನಾನು ನನ್ಗೆ ಅನ್ಕೊಂಡೆ ಹೆಸರು ಕರೆದು ಬಿಟ್ಟು ಹೇಳ್ಬೇಕು ತಾನೆ. How many of you still copying? There is. It should not come. Send it back. Observe slowly as to what is wrong. Did you consider all the results pre-post, pre-part together? All the results post-part together? I will split it in the correct ratio. I will taken the same amount. Then the result should difference should not come. Balance sheet is showing difference. Is your balance sheet showing difference? I'll do it. You check what you might have done wrong. Might have done one very silly mistake. You would have not done big mistake. Very silly mistake. We will show capital reserve and revenue reserve. We will not show it as general reserve, P&L, security premium, capital redemption reserve. No. Reserves will be shown as capital revenue. Reserves which were there from the time before I came, reserves which came after I came. Can I? Everybody is with me. Hey, everybody, look at the board. We will do illustration number, sorry, AQ 9. What's new here? There are two reserves. There are ಅಷ್ಟೇ. Resting everything is going to be exactly same like what we've done in the past. Pay attention, stop writing, keep your pen, pencil, everything down. If I see anyone writing, I'll keep your pen in your throat. Only once. ಮತ್ತೆ ಚುಚ್ಚಲ್ಲ ಒಂದ್ಸತಿ. Focus. Equity share capital. 10,000 shares of rupee 10 each. Our capital. I'll write in our consolidated balance sheet. This I don't think you have any doubt. This is again one favorite item. No adjustment. As it is you take and then write. Next, share capital of subsidiary. What to do? Split. How do we split it into two? One is holding, other one is very good. I don't know how much is holding, how much is minority. So I'll write 5,000 shares of 10 is 50. I will write the word holding, I'll write the word minority, but I don't know how much holding, how much minority. I'll leave it like that. Done. Say something. Next, reserves. How much is general reserve and P&L? 10 and 5. This general reserve and P&L, 10 and 5, should be split into pre and post. You agree with me? I'll split it later. Right now, I'll write General reserve 10, P&L 5. I'll write here pre-post, pre-post. I don't know how much pre, how much post. When I come to read the adjustments, I'll understand pre-post. Once I split it into pre-post, pre together, I'll share between holding minority. Post together, I'll share it between holding and minority. For now, I'll write the heading pre-post, and then wait. Next, then comes to our PP. How much is our PP? How much is their PP? 50 plus 65. 1,15,000. I'll write it in my consolidated balance sheet. Assets PPE 50 plus 65. 1,15,000. Done. Next item in balance sheet. Investment in subsidiary. How much investment have I done? 4,000 shares. I've invested in how many shares? Can I say share capital holdings part is 4,000 shares, which is 40,000 rupees, which is 80%. Correct? What do I do with this 40,000? It should be compared with book value of investment. What is this 40,000? Nominal value of investment. Where do I compare book value, nominal value? Cost of control. There I would write nominal value of investment 40,000. Nominal value of investment. Everybody got 40 nominal value. Understood? Clear? I would write 1,000 shares, 10,000 rupees, 20%. What is this? Minority. Where do I write this? Minority interest. Shall I write it in balance sheet directly? No. The reason is minority interest will include share capital, but not only share capital. Minority interest is minorities share in share capital, minorities share in pre-acquisition reserve, minorities share in post-acquisition reserve. Repeat. What is minority interest? Minority interest is formed of three things. One, share capital, pre-acquisition, post, everything to the extent minorities interest percentage. Got this? So I'll keep one table open for minority interest. Share capital 10,000. Share capital, I'll write capital reserve, revenue reserve later. Is it okay? What's after this? After this, then we'll go to next item. That one done. This 4,000 shares and inner column, outer column 50. What is 50? Value of investment. Where do I write? Because this will be compared with nominal value. I'll write it in inner column. Why? Pre-acquisition reserve. To the extent it belongs to holding company should be deducted. Not full pre-acquisition reserve. Pre-acquisition reserves, to the extent it belongs to, first the reserves of the subsidiary will be split into pre-post. Then in pre we split it into holding minority. Holdings share in pre-acquisition of subsidiaries reserves should be deducted from book value of investment. I'll keep it in inner column. Wait till the end. Now we are done with entire balance sheet. Everything is considered in the balance sheet. Have I come to adjustment? On the date of acquisition, how much was general reserve? 6,000. How much was P&L? Can I say in this 10, pre is 6, in this 5, pre is 1. Can we find post? Very important. You will make a mistake on this later. When later? Later means later. Later means not now. How much is post acquisition? How did you come across 4,000? 10,000 minus 4,000. This is revenue reserve. This is capital reserve. Sir, shall I take? Wait. One more reserve is also there. P&L. Pre is 1. Post is? How did you get 4? 5 minus? Very good. Can I say this is capital? This is revenue? Capital 6. Capital 1. Together. Capital reserve is 7. Revenue reserve 4. Revenue reserve 4. Together. How should it be split between holding minority? Percentage. Do you have the percentage? Yeah. 80 can be 75, 25, 65, 35, 60, 40, 52, 48. Anything is possible. Don't blindly do in the exam 80, 20 because in AQ it was 80, 20. It can be any other number. And in every question we are computing it separately. I hope you remember. Okay. Then 80% of 7,000. 5,000. What is 5,600? Holding company's share in pre-acquisition reserves of subsidiary company. Once again, what is 5,000? Guys, these statements are important. If not, you'll be ಅಲ್ಲಿ ಬರಿಬೇಕು. Go here, there. You can't tell here, there. You should know words. So please stop writing. I can see some of you feeling there. You got used to it. One pattern is fixed. Pattern is important. It will help you solve the problem quicker. But you can't be blank. You can't be like this. I'll write there. From here, you should go there. There. You should remove. Tell words. It's important. In the exam, what if you are not writing? You are asking someone to write. You should tell them something happened. Yeah, you got little injured. You should take help of somebody to write. You can't write there. Should be able to tell. So please tell ya. What is this 5,600? Yes, sir. Allah, what is 5,600? Holdings share in pre-acquisition reserve of subsidiary. Where do I write this 5,600? Ali sir, mail it. Cost of in cost of control. Where do I write? Deduct from what? Nice. 5,600. Deduct. What do we get? 44,000. 44,400 is asset. Liability is 40. Which is more? Asset. Shall I write goodwill? How much is it more by? Where do I write that goodwill? Balance sheet asset side. 4,400. Done. Come to the next item. Post acquisition reserve. To the extent it belongs to holding. 8,000 into 80%. 6,400. What is this? This is post holding companies share in post acquisition reserves or revenue reserves of subsidiary company. Where do I write this? Balance sheet, liability side, reserves and surplus. I would write in the consolidated balance sheet, liability side, reserves and surplus. What reserve? Revenue reserve, not capital reserve. Is it capital reserve? Revenue reserve. Then minority share. Either you can do 7,000 minus 5,600 or 7,000 into 20%, 1,400. Either I can do 8,000 into 20% or 8,000 minus 6,400. Add 1,600 and 1,400. What is this? Minorities share in the reserves of the subsidiary company. They will not split it into holding minor, sorry, will not split it into pre-post. Actually not needed. Where do I write this? Minority interest. In minority interest. Total minority interest 13,000. The moment I write this minority interest in my balance sheet, it should tally 1 lakh plus 6,400 plus 13, 1 lakh 19,400, 1 lakh 15,000 plus 4,400, 1 lakh 19,400. Did you get this? Feeling ಬರ್ತಾ ಇದೆಯಾ ಈಗ? This is question number 9. 6 more. ಅನ್ನನೇ ಬಡ್ಸಿಲ್ಲ ಸಾರ್ ಅಂತ ಕುಡಿತೀರಾ? Why Abhishek Sharma in everything? I'll tell you, not personal. You people are in a generation where every other match you saw, team is winning. So you don't understand and you don't appreciate that victory. You should have been watching cricket from much earlier, where one victory is to be so rare, is to crave for victory. And people had continuous bad performances, they were still in team because bench was not strong. Now, by the time you people have started watching cricket, bench is so strong, so many people waiting to get in that two matches someone plays bad, you people stop appreciating them. But that's not how the game is actually played. Game is not just that performance on one day on the ground. ಅರ್ಥ ಆಗಲ್ಲ ಬಿಡಿ. You guys have seen too much IPL and too much games where team is winning. One match ಗೆದ್ರೆ we to savor that win for months. ನಾವು ಒಂದ್ಸತಿ ಸೋತ್ರೆ 2 ವರ್ಷದವರೆಗೂ ಹಾರ್ಟ್ ಬ್ರೇಕ್. So disappointing. Remember 2nd April? No. What do you remember? November. This is the problem. 2nd April 2011. Dhoni finished it up in style. Can I scroll down? You want a short break of 5 minutes after this question? Like you, longer than 5 minutes will no longer be called short break. What? 18? 18 hours break? Sir is so dumb. You want a short break of 18 hours, sir. Why don't you take a break of 3 months? I'll not tell this. Somebody else. No, there's a news. Institute wants to plan in the future to conduct exam 4 times a year. Exam. Exam. Straight exam. Huh? 3 ತಿಂಗಳಿಗೆ ಒಂದಾಗತ್ತೆ. It will become more annoying. My observation, more attempts in a year has diluted the intensity of each attempt. If it is once in 6 months, no, after one attempt, if a student fails, they had enough time to come out of that failure, start preparations, peak the preparations, perform at a high level. Now, before the results come, exam form is released. Once the result comes, you cry later. First fill the exam form because form will be closed in a week. By the time you finish crying, admit card is in your hand. By the time you start studying, one more attempt is there. And if you have to give a wholehearted attempt for the second time, you should skip one attempt. If not, people are not able to give that good exam. If you skip one attempt, gap is more. Previously, gap used to be less. So people are taking longer to clear than before. This is my personal observation based on few students whom I've seen very closely. I might be totally wrong. I'll take that as a disclaimer. Can I scroll down? The most easiest attempt to pass CA exam at any level is first attempt. Easiest attempt to pass is first attempt. Confidence is high, practice is good, no emotional feelings being hurt. Classes are over. Good longest study break you get for first attempt. Second attempt onwards, you don't get so much time. You don't have so much confidence. Mentally, your health will be low. You will not feel great about yourself. And you're building it all now. Now you're sitting next to your friend and then studying. Sometimes you solve the problem before your friend. Some days your friend was lazy, absent, did not come to class, you came to class. Your friend did not do homework, you did homework. Tapi in the result, if your friend passes and then you don't pass, then pass. That guy passed. Yeah, I was more committed than him. I was more regular. I was more hardworking. I was more smart. How did he pass and I did not pass? Me, why did you fail? You'll have bigger question to answer. How did he pass and not me? Which answer you will not find, for which another 1 week of trauma. Or you will be mentally more low. Not copy ಮಾಡ್ತಾ ಇದ್ದ ಅವನು. Because of your friend. And your friend can't console you also, even if he cares. If he comes to you and then says, it's okay, man, you'll clear next year. Shut up, you don't talk. Okay? Your part, don't know the feeling of it is if you fail. He fail ಆಗಿದ್ರೆ ಗೊತ್ತಾಗ್ತಾ ಇತ್ತು. If you tell that, he will be hurt. Now I've passed and my friend is not happy. So friendship broken. Dama. True test of your friendship is when one friend passes, the other friend doesn't. And if you successfully have that good friendship, then I truly believe in your friendship to be a true friendship. But let me know when you're done. Can I go to next one? Short break. Okay, yeah, cool. No, you copied till here, no? No doubts. Hello everyone. Welcome back. Consolidation, we've done till AQ9. We'll now do AQ10. AQ10 is one with negative result. What do you mean by negative result? How unique is this going to be? You remember till now I was making you do the 10 minus 4, 5 minus 3. You're finding it funny. It will be no longer funny. Here is where it's the true test. I'll understand whether you understood then or you did not understand then. Okay? Observe, 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 observe. Let me tell you what is new in this. Everything looks similar. Reserves are 2, but we've already done one AQ in the past where reserves were. Let me tell you how is this question unique. How much is general reserve? 10. How much is P&L? Now see how much is general reserve on the date of acquisition? 6. At the date of balance sheet it is 10. On the date of acquisition it was 6. 6 is pre. Post is 10 minus 6. 10 minus 6 is very simple. P&L. How much is it on the date of consolidation? 5. How much was it on the date of acquisition? 6. How much is it post? 1. Very good. Minus 1. Why? 5 minus 6. 5 minus 6. Not 6 minus 5. 5 is on the date of consolidation. 6 was there on the date of acquisition. So profit was 6,000. After you bought the shares, profit came to 5,000. So it reduced by 1. Why? There is loss of 1,000. So pre 6 profit, post 1,000 loss. Pre 6,000 profit, post 1,000 ashte. Nothing else. Rest everything is like what we've done in the past. Very, very easy. Can we do? If you understood this, this problem is actually done. I can give it as homework, but I will not. I will not. I will. I will. Done. I will solve. Can I solve? Can I have your attention? Will you help me? You could do that part. You figured it out. Very good. Good. Previous one, what was wrong? Silly mistake, no? What was that? Totally wrong. I told you, no, you would have not done conceptual wrong because in that pattern, conceptually, you can't go wrong. If you've gone wrong somewhere, it should be very silly mistake. Equity and liabilities. 10,000 shares of rupees 10 each 1 lakh. I would write it as it is. 10,000 shares of 10 each 1 lakh. Done. Then how much is the share capital of subsidiary? 5,000 shares of rupees 10 each. How much is it? 50. Where do I write 5,000 shares of rupees 10 each? 50. Share holding. I'll write share capital 5,000 shares of 10 each 50 split between holding minority. Holding and everybody got this? Next. What's after that? General reserve. How much is general reserve? How much is P&L? 10 and 5. Should be split into pre and post. Then between holding and minority. First as pre and post. Then as holding and minority. So I would write here reserves. General reserve 10, P&L 5. Pre-post, pre-post. At the end of the question, you will get to know the balance. We'll do it at the end. Even when you solve on your own, don't jump immediately to adjustment. Where are we? We are here. ಇಲ್ಲೇ ಇರಬೇಕು. ಇಲ್ಲಿ ಅಲ್ಲಿ ಹೋಗಬಾರ್ದು. You should not go to the end of the problem. Line to line you should do. Once you move one line down, you should go in such a way that you need not come back. If you keep jumping from first line to last line to first line, then you don't know which line have you written, which line have you not. You'll end up reading the question more than once, which should not happen. Done. Read the next item. Assets, PPE 50. Assets, PPE 65. 50 plus 65. No adjustments. Straight away read it in the balance sheet. Asset side, PPE 50 plus 65. 1,15,000. Tomorrow, PPE will become very interesting. Then Investment in subsidiary. Don't go to 50,000. First deal with inner column. How much is inner column amount? How much? 4,000. Everybody, I would write 4,000 shares in my holding. 4,000 shares in my holding. 4,000 shares, 40,000 rupees, 80%. Where do I write 40,000? In cost of control. What do you write in cost of control? Nominal value of investment. How much? 40,000. Done. How much is minority share? 1,000 shares. 10,000. 20%. Where do you write this 10,000? Minority interest. Why here? Why can't I write in balance sheet directly? The reserves of the subsidiary, which should be first split as capital reserve and revenue reserve, should be later split as holding and minority. Holdings part, capital reserve will get adjusted with cost of control, book value of investment. Revenue reserve will go to balance sheet. Minorities share in pre and post acquisition reserve of subsidiary will be added to minority interest share in the share capital of subsidiary, and then the total will be posted to consolidated balance sheet liability side as a separate line item below reserves and surplus. I hope you got this. Whatever statements what I'm making in between, do you understand that? If I tell just that, you'll understand. All that you don't have to write. Those statements are what is covered in the theory chart already. We'll revise that at the end of AQs. Now, if you do, you'll not understand. Okay, cool. What's after this share capital 10,000? Then 80-20. Hey, is this 80-20 important? Yes. Why? Split reserves. So what do I do? Reserves first is split as pre-post. Am I right? That I'll be splitting as 80-20 later. So I'll write that percentage now only and wait. Remember, in the main question, it need not be 80-20. It can be 75-25, 70-30, 69-31, 51-49, 52-48 or any percentage. Then what's after that? PP done, investment inner column done. Outer column amount 50. What is that 50,000? Book value of, I would write in cost of control, book value of investment 50,000 inner column. Why is it in inner column? What should I deduct? Pre-acquisition reserves. Deduct? No, we don't know. We only know reserves. We should do pre-post. When will we do? After balance sheet. Clear? Next, now we'll go to the post balance sheet. How much is general reserve pre? On the date of acquisition, general reserve was 6, P&L was 6. I would write in our reserve table. General reserve 6, P&L 6. Done. 10 ಅಲ್ಲಿ 6 ಪ್ರೀ ಆದ್ರೆ ಪೋಸ್ಟ್ ಎಷ್ಟು 10 minus 6 and 5 minus 6 minus 1. Everybody got this? Pakka? Now, what to do? Capital reserve together. Capital reserve 6, capital reserve 6. 6 plus 6, 36. No? Good. 12. 12. How about revenue reserve? 4 plus minus 1. 4 plus minus 1. 4 minus 1. 3. You know it? Did not take 5. Very good. This will be split between holding minority. First, holdings share in pre-acquisition reserves of subsidiary. What to do with this 9,600? Deduct from value of investment in, very good, cost of control, book value of investment. I will deduct 9,600. 50 minus 9,600. 40,000. Nominal value 40. Book value 4,400. 400 will be fantastic. Hey, smart students. You can tell thank you. ಅದನ್ನು ಹೇಳ್ಕೊಡ್ಬೇಕು. Why do you not say thank you? You think I'm not complimenting? I'm we smart. Sorry, you're joking. Yeah, I am. 400 goodwill. Where do I write goodwill 400? Not your name. Goodwill. Goodwill asset side. 400. Then what's next? Come back here. Post acquisition reserves of subsidiary, which belongs to holding. 3,000 into 80%. Where do I write this? Balance sheet, reserves and surplus. Name, revenue reserve. Thank you for not telling your name. 2000. Then we will take capital and revenue reserve share of minority. 12,000 into 20%, 2,400. 3,000 into 20%, 600. What do I do with this 2,400 and 600? Minority interest. Dun, dun, dun. Dun, dun, dun. Total 13,000. I'll write it in consolidated balance sheet. Ta-da. Everything's done. Check the total. 1,15,400. 1,15,000. How many of you have got this right? Very good. Shabash. You're done now. When did you do? In the break? Before break. Smart. So whoever has not done, please try this as homework. But this is how it will tally. It will tally. It will tally. You can do. It's not like people who have done are smart, people who have not done are not smart. No. People who done are not lazy. People who didn't do are lazy. Can I go to next one? Cool. Let's go to 11th one. 11th one is going to be little more practical. Till now, whenever we analyze the reserves of the subsidiary, focus. Till now, whenever we analyze the reserves of the subsidiary, how did we analyze the reserves? This much pre, this much post. How did we know how much is pre? They told in the, so basically they put rice, they put curd, they mixed it like this and they're giving it like this to you. Next question. On the kitchen counter, there is rice. In the fridge, there is curd. You go mix it and take. Needs little bit of effort. But is it difficult? Doable. But is the resource available? But is it served on the plate to your mouth? No. Yeah, you should take the curd packet, open it. You take the rice, put the curd, mix it, and then eat. Let's see if you'll eat. Shall we? Are hungry, sir. Hunger is always needed. Hunger is what differentiates people from who do and people who don't. Hunger. ಕೆಲಸ ಮಾಡಕ್ಕೆ ಹಸಿವಿರಬೇಕು. See, equity and liabilities. 10,000 shares of, I will tell more, but you won't like. 10,000 shares of rupees 10 each. 1 lakh. What is that? 10,000 shares of rupees 10 each, 1 lakh. Holding company share. Where do we rank? That's it. Let's write 10,000 shares of rupees 10 each, 1 lakh. Subsidiary shares is how much? 5,000 shares of rupees 10 each, 50. What do I do? Split this into holding and minority. Shall I? 5,000 shares of rupees 10 each, holding minority. We will split when later. Right now, we'll just write the names. Then next, reserves of subsidiary. How much? 15,000. What do you do with this 15? Split pre, post. Then pre will be shared between holding minority, post will be shared between holding minority. Now, if you come to the reserve table, I'll write here. Oh, sir. It's going to be interesting. It's not difficult. Very nice. Practical. Table noted ತಕ್ಷಣ ಭಯ ಆಯ್ತಾ? After that 15 assets PP 50 65 1 lakh 50. Shall I add it and write it in the balance sheet asset side? 50 plus 65 1 lakh 15. Easy. Then come to next item. Investment in subsidiary. How much? How much? 4,000 shares. Don't go to 50,000 yet. Where do I rate 4,000? I want you to tell. Holdings Allah. Subsidiary share capital. Holdings share. You told holding share. 4,000 shares. How much is it? 40,000. How much percentage? Very good. Where do I write 40,000? In cost of control. Nominal value of investment. 40,000. Done. How about minority share? 1,000 shares. 10,000 rupees. 20%. Where do I write it? Minority interest. Share capital. 10,000. Done. Next. What do we do with this 80-20? Yeah, percentage. Where do we use this? Reserve split. So I'll have the table to split the reserve. There I would write 80-20. Got it? Come back, come back, come back. Now 50. What is 50? Book value of investment. Where do I write? Cost of control. Inner column. Why? First we should deduct pre-acquisition reserve to the extent holding company's share. Then you will write it in the outer column. Then you compare it with nominal value, which is liability. If the asset is more, goodwill. If the liability is more, that will go to consolidated balance sheet. Done. Then why this we're done with balance sheet fully? Anybody has any doubt with balance sheet? See, shares were acquired on, very important. Shares were acquired on first of, very good. You understood first of? What is the balance sheet date? 31st of March. Nothing is mentioned. We'll assume it to be on 31st. When did the acquisition happen? So, can I say April to September, no holding subsidiary relationship. October to March, holding subsidiary relationship. Am I right? So, till which date the profits earned are pre-acquisition? Till 1st of October, whatever profits was earned was pre. What is post-acquisition profits? Profit earned after, once again, I want you to remember this very clearly. Tell me till when is the profit pre? Profit earned till first of. When is the profit post? Right there. Below the two lines of question, you have little space? Right there. You will have this doubt later. Same thing will come as doubt later. What will you write? Profit till 1st October is pre. Profit earned after 1st October is put. Write it in the language you understand. If you understand in Kannada, you write in Kannada. If you understand it in Hindi, you write it in Hindi. ಏನಪ್ಪ? Which language? What should I tell in Malayalam? Do you understand Malayalam? Profit earned till 1st of October is pre. Profit earned after 1st October is post. ನೀವು ಯಾವ ಪ್ರಾಫಿಟ್ ಅನ್ನು 1st of October ಗಿಂತ ಮುಂಚೆ ಅರ್ನ್ ಮಾಡಿರ್ತೀರೋ ಅದು ಫ್ರೀ. ನೀವು ಯಾವ ಪ್ರಾಫಿಟ್ ಅನ್ನು 1st of October ಆದ ನಂತರ ಅರ್ನ್ ಮಾಡಿರ್ತೀರೋ ಅದು ಪೋಸ್ಟ್. ಶುಭರಾತ್ರಿ. Understood? Wear suit and come. But did you understand this? That small boys to come. Got this? Okay. Help me out. How much is it on 1st of April? How much is it on 1st of April? How much is reserves and surplus on the date of consolidation? How much is on the 1st of April? 3,000 is pre or post? Very good. So how much is post? Very good. Shabash. Come on. Come on, come on. Clap for yourself. 12,000. I've taught you so much. Till now I told you 3 times, 4 times. I made you right. You told you understood. Now when I ask you, like, oh, 3,000 pre. 15 minus 3, 12,000 post. I agree 3,000 is pre. That does not mean 12,000 is post. Till 1st of April is 3, no? That is pre. What is 12? Not post. It is April to March. 12,000 is April to, when did the acquisition happen? October 1st. So how many months? April, May, June, July, August, September. So 12,000 into 6 divided by 12. 6,000 is pre. 6,000 is post. Total pre is 3 plus 6, 9. Post is 6. Some people will be more genius. They'll straight away put 50,000 into 6 by 12. In 15, in 15, 3,000 is last year. That is pre only. In 15, 3,000 is previous, old year, pre. 12,000 is current year. In current year, 6 months pre, 6 months post. When did the acquisition happen? First of, what have you written? Till when is it pre? Till 1st October. Till 1st April, 3,000 is pre. 15 minus 3. 15 is on 31st March. 3,000 is on 1st of April. If you deduct 12,000 is 1st of April to 31st March. 12 months. In that, how many months pre? 6. How many months post? So 6 by 12, 6 by 12 should split. Sir, what if it was not 1st October? What if it was 31st December? 9 by 12, 3 by 12. 9 by 12 pre, 3 by 12 post. Got it? There's something. Don't do silly mistake. You can do two varieties of mistake. One, you will write 3 pre. The moment you write 3 pre, feeling will come 15 minus 3, 12 post. First kind of mistake. That student also will lose marks. Second kind of mistake. They will say, I know, 1st October, 6 months pre, 6 months post, 15,000 into 6 by 12, 7,500 pre, 15,000 into 6 by 12, 7,500 post. Both are wrong. You understood how much pre? How much pre? 9. How much post? Pakka? We'll do it in detail. I can explain in detail, but before that, I want you to first know the answer. As on 1st April, how much? 3. This is pre, no doubt. Balance is there, no? That is during the year, April to March, 12 months, 12,000. In this, April to September, 6 months is pre. October to March, 6 months is post. I'll do 6,000, 6,000 as pre and post. Do 3 plus 6 plus 6, 50. How much is pre? How much is pre? 3 plus 6. 3 plus 6 is? Very good. How much is post? I am in no hurry. Urgent nilla. See aram se. Tell me if you understood. Read that question once again. See this answer once again. If you have doubt, you ask. I don't want to go forward before you understanding this. Stop writing. Wow. Class will ಬರೆಯೋದಕ್ಕೆ target today should read 10 pages. Garbage. Nobody has doubt? Akka, can I proceed? Sure. Okay. Now 8,000, sorry, 9,000 into 80%. 7,000. Where do I rate this 7,200? Deduct from? Very good. 50,000 minus 7,200. 42,800. 40,000 liability. 42,800 asset. Which is more? 2,800 goodwill. I'll write in the balance sheet asset side. Understood? Then holdings share in post acquisition 6,000 into 80%. 4,800. Where do I write? Balance sheet, reserves and surplus. Capital reserve, la 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 la. Revenue reserve. Understood? What about the balance? Minority share. 9,000 minus 7,200 or 9,000 into 20%. 1,800. 6,000 minus 4,800 or 6,000 into 20%. Can I say 1,800, 1,200? What is 1,800, 1,200? Minorities share. Add everything. What do we get total? 13,000. You write it as minority interest in the consolidated balance sheet liability side as a separate line item called minority interest. Now check the total. 1,17,800. 1,17,800. Understood? Say something. Thank you. ಥ್ಯಾಂಕ್ ಯು ಬೇಡ ಅರ್ಥ ಆಯ್ತು ಅಂತ ಹೇಳಿ ಖುಷಿ ಆಗುತ್ತೆ. This homework will be revise all the AQs once again. What could we've done today? Tomorrow we'll finish all the AQs on balance sheet. Towards the end, we'll start doing questions from material on balance sheet. Okay, can I do the next one? Last one for today. Next one will be last. Well, ಇನ್ನ ಬರೀರಿ ಆಯ್ತಾ? Anyone copying? How many of you are copying? Should I give time? I'll give you a minute so that others who are trying also can continue trying. People who have not copied will copy, and in a minute we'll go to next one. ಅಲ್ಲಿಂದ ಕಾಣುತ್ತೆ, ಇಲ್ಲಿಂದ ಕಾಣಲ್ಲ. ಆ ಕಡೆ ಮನೆ ನಾಯಿ ತಾನೆ, ಮೇಲೆ ಹೋಗ್ಬೇಕು. Fourth floor class, if you take, you'll see their terrace. That guy will come, will put his clothes to dry. See, he knows the entire itinerary. They'll bring the dog, make the dog bath, then he'll water the plants, then he'll sit and then scroll reels. In the old building ground floor, next to Yeshas Academy was one house. Or ಮನೇಲಿ ಅಡ್ಗೆ ಮನೇಲಿ ಕುಕ್ಕರ್ ಇಟ್ರೆ ಇನ್ ಗ್ರೌಂಡ್ ಫ್ಲೋರ್ ಕ್ಲಾಸ್ ವಿ ಯೂಸ್ ಟು ಹಿಯರ್. ನನಗೆ ಪ್ಯಾನಿಕ್ ಅಟ್ಯಾಕ್ ಆಗ್ತಾ ಇತ್ತು. ಅಯ್ಯೋ ಆಂಟಿ ಆಂಟಿ 3 whistles ಆಂಟಿ, they can't hear us, we can only hear their cooker whistle. ವಾ, ಆಂಟಿ ಅಂದ್ರೆ ಅಂಕಲ್ ಇರ್ತಾರ. ಮ್ಯಾಮ್, ಕಾಲ್ ಮೀ ಮ್ಯಾಮ್. Cool, let's go to next one. It's going to be a very memorable problem. In this question, there is some abnormal loss. What do you mean by abnormal loss? Come to AQ level. Same thing what we've discussed. We need to understand this as a base to go to 12th one. I want you all to stop writing. You had your time. Now it's my time. How much is the reserves on the date of consolidation? How much is the reserves on the date of consolidation? 15,000. How much was at the beginning of the year? If you deduct 3,000 from 15, what was the profit earned during the year? How much was the profit earned during the year? How did you split 12,000 as pre and post? 6 months pre, 6 months post. You did 12,000 into 6 by 12 into 6 by 12. Is it right? My question to you is, just because 6 months was pre, 6 months was post, doesn't mean that profit is also equal for 2 periods. We made an assumption that profit is even throughout the year. If profit for full year is 12, we thought 1,000 per month, 6 months, 6,000. Is it always like that? It can be different. You can have 10,000 profit in the first 6 months, 2,000 profit in the next 6 months. Possible. You can have 15,000 profit in the first 6 months, 3,000 loss in the next 6 months. Do you understand that? So it can be uneven. It can be uneven. But we've assumed it to be. Here they're telling there is one item which is abnormal. Other than this, everything is normal. There is one item which is abnormal. Other than this, everything else is. How much is the reserves of subsidiary? 15,000. How much is reserves of subsidiary? 50. Tell ya. In that, how much was it on the date when you acquired? 3. Deduct 3,000. 12,000 is after 1st of April, not post. 3,000 is pre. 3,000 too is pre. Only 3 is not pre. 3 is pre, but there is more which is pre. You agree with me? Till 1st April, 3,000 pre. How much is after 1st April? 12. How much is after 1st April? Till 31st March. When did the acquisition happen? First up. That 12,000, you can't do 6 by 12. You can't do. You understood this? Say something, yeah. Okay, let's say you want to do 6 by 12. What is the assumption based on which you will do 6 by 12? Even. It is. Now, why is it not even? There is. What is that abnormal loss? Read. 1st of August. What happened on 1st of August? Goods costing rupees. Goods cost is how much? Was destroyed by, and insurance claim was, once again, goods costing rupees was destroyed by fire. Insurance claim is goods caught fire, goods became ashes. Insurance company told, I will give you claim. Did they give full 2000? They gave 1000. What is the value of goods destroyed? What is the money received? 500 loss. 500? Everybody understood 500 loss? Pakka? When did this happen? Underline the word 1st August. Underline the word 1st August. Can I say 1st August? Can I say 1st August is before 1st October? Pakka? If 1st August is before 1st October, can I say that 1st August transaction, whatever loss, it is pre? What is it? Pakka? Very good. Right there. Pre and the This loss is pre. This loss is pre. How do I say it's pre? When did this fire happen? 1st of August. When did the acquisition happen? Before we acquired the shares only this loss happened. Do you agree with me? Say something, yeah. How much is the profit during the year? You understood the 12, no? Profit on the date of consolidation is 15. In 15, 3000 was before 1st April. If you eliminate April to March is 12,000. 12,000 is the profit earned during the year. 12,000 is the profit earned during the, in that, how much is pre-loss? 500 pre-loss I'll write, no, abnormal. 500 is loss minus 500. What is it? Minus 5. It is pre and it is loss. Got it? Tell ya, how much is normal? How much profit for the year is 12? Correct or not? Profit for the year will include normal and abnormal. If normal, abnormal is not there, 12 I would have straight away divided 6 by 12, 6 by 12. There is abnormal item. How much is abnormal? Normally, how much is my profit? Very good. Once, everyone. Come on, clap for yourself. Clap, clap. 1, 2, 3, start clapping. Hey, clap. You should never forget. Clap at your mistakes. Clap, clap, clap. Everybody should clap. 1, 2, 3, start. Shabash, shabash. Clap, yeah. Or tell right answer. 12,000? 12,500. Sir, till now we did throughout. I told you. Remember this, you will make mistake. 12 minus 6, 6. Here, what did we do? I told you 10 minus 6, 4. Correct, Alva? 5 minus 6 minus 1. Here it is 12. Here it is minus 500. Sir. 12 minus 500, 11,500. 12 minus of minus 500. 12,000 is profit for the year. After adjusting loss of 500. If there was no loss, profit would have been 12,500. No? No, sir. 11,500. That's the reason I told clap. Either you should clap or you should accept the mistake. You don't understand? 12,500 is the profit for the year, which is normal. What is 12,500? Pre or post? Normal profit for the year. That should be split 6 by 12, 6 by 12. Now you will get pre together, post together, you will get the answer. I'll show this. Only trick is this, rest everything is easy. How much is a exam? They had asked a question on this adjustment. Numbers were different. Concept is same. If you see the study material answer, something and all they have done. We will analyze it step by step. How much is the profit and loss balance? How much is the P&L balance? How much is as on 1st of April? Akka, how much is the profit during the year? Everybody? This I'll split it into two. Abnormal, normal. Abnormal is on 1st of August. That is pre. Why acquisition happened on 1st of October. How do we find how much is pre? Very simple. Cost is 2000. Insurance recovery is 1500. 500 loss. If you write minus 500, you should write profit. If you write loss, you should write 500. Profit is minus 500. 12,000 is for the full year. Profit. In that 500 loss is abnormal. Normal is 12,000 minus of minus 500. 12,000. Even now you feel like telling 11,500, no? How many of you inside feeling 11,500 ಬರ್ತಾ ಇದೆಯಾ? 2 ಮಾರ್ಕ್ ಹೋಗುತ್ತೆ ಹಂಗೆ ಮಾಡಿದ್ರೆ. Then we will split this into April and October. Or April to September, October to March. Pre-post. So I'll do that 12,000 plus 500 into 6 by 12. 6,250, 6,250. This 6,250 is pre-capitalism. This 6,250 is post. Here abnormal minus 400 is capital reserve. This is capital reserve. So how much is capital reserve? 3 minus 500 plus 6,250. 8,000 post acquisition. 6,000. Rest everything you can do. This is the only tricky part. Read the question once again. See the answer once again. You tell me if you understand, or you ask me if you have any doubt. I'm not going to teach you anything new. Once you understand this reserves and surplus, we are done for the day. Tomorrow we'll start with bonus issue and asset-based adjustments in consolidated balance sheet. Copy this and also ask me if you have any doubt. Easy there. I show the balance sheet, complete it, then I show the answer so that you can check. People watching at home, did you finish this? Okay, I will reveal the balance sheet, check if you're getting the same numbers. Ask me if you are getting any, if you have any doubt or something's not matching. 1 lakh 5 and 13. 1 lakh 18. Did it tally at 1 lakh 18? Cost of control, you got 3,000 goodwill. Check, 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 check. Solve ಮಾಡಿ ಫೋಟೋ ತೆಗಿಬೇಡಿ, ಕಾಪಿ ಮಾಡಬೇಡಿ, write on your own. Instead of 20 AQs, even if I make you do 100, you will never get confidence. You will get confidence when you do it. When it tallies in your hand using your calculator. Not sir does it on the board, you copy. Done. Everybody. Cool. Shall we take a break for the day? Like how you want, 18 hours break. Sure. Okay, guys, it's 2 o'clock and we've also done till AQ 12. Revise all the 12 AQs before you come to tomorrow's class. We'll start with bonus issue and asset-based ones in tomorrow's class. Tomorrow, if time permits, if we feel like consolidation is too overwhelming, then we'll do ACE 18. Otherwise, we will continue with consolidation if the flow is good. That's the plan. To get your A book. That's where the questions are there on consolidation. After we finish AQs on balance sheet, we will go. We will not finish all the AQs. We'll finish AQs on balance sheet. And then we'll do consolidation question from the material. Is that fine? That's it, guys. Did you learn something new today? Did you guys have a little fun today? Remember, life is not a battle to be struggling. It's a game to be enjoyed. Till the time you're learning something new or having little fun, it's all good. The day you guys stop learning something or stop having fun, trust me, you might start struggling because you might be in a battle. So thumb rule to stay happy is pretty simple. It's to stay in the game. So for one last time on this day, I have just one simple question for all of you. Will India beat England today? Are we in the game? Are we in the game? Come on at the top of your voice. Are we in the game? Yes. See India in final. See you all tomorrow in the class. Till then, have a great time, guys. Ta-da, bye-bye. Take care. Bye. ಹೋಗಿ ಬನ್ನಿ ಗೆಳೆಯರೇ.